Hello, students. A very good evening to you all. So, today we are having a revision class of our three chapters from our module number 3. So, today we will be covering income tax authorities, assessment procedure, and appeal and revision. So, the class would be a little bit heavy, but I'll try to make it a light as much as possible. These three chapters are important from practical as well as from exam point of view. So we'll start with income tax authority. Let me share the screen with you. So our first topic is income tax authorities. Who are income tax authorities? So this section 116, section 116, which defines who all are the income tax authorities. Wherever in the act the word income tax authority is written, it means the authorities which we will discuss now. So in income tax department, the apex body is the CBDT, Central Board of Direct Taxes. Is the father of the income tax department. Is the main apex body which consists of chairman and its members. Okay, it's the highest executory body. It's under the Ministry of Finance and it supervises and controls all officers under the income tax department. Okay, so CBDT has been empowered under Section 295 to make rules for the proper administration of the Act. So whatever rules, income tax rules, which is being formulated, which has been drafted, is being drafted by the CBDT. Okay. Now my income tax department is divided into two parts. One is investigation wing and another is assessment wing. The officers under the investigation wing, we use the word director. Okay. And for the officer in the assessment wing, we use the word commissioner. So on the top of the department, just below CBDT, here comes in the assessment wing, principal chief commissioner of income tax, then the chief commissioner of income tax. Below the chief commissioner, there is commissioner, the principal commissioner, or below the principal commissioner, then comes the commissioner of income tax. Equivalent to the commissioner of income tax, I have CITA, Commissioner of Income Tax Appeal. So the CIT and CITA both are equal officer of equal rank. One officer is into administration, CIT, and another officer, CITA, is into the judiciary. Okay, but they both are of equal rank. When I'm telling you they're both of equal rank, because I will use this subsequently in our lecture today. So at the top, CBDT. Below CBDT, there is Principal Chief Commissioner. Then comes the Chief Commissioner. Then Principal Commissioner. Then the Commissioner. Then comes Additional CIT or Additional CIT Appeal. Then below Additional CIT, there is JCIT, Joint Commissioner of Income Tax or JCIT Appeal. Then below JCIT is DCIT, Deputy Commissioner of Income Tax. Then Assistant Commissioner of Income Tax. And then lastly, the ITO. And below ITO, they are inspectors and TRO, tax recovery officer, also part of the income tax authority. So at the top, we discuss CBDT. Then in the assessment wing, I have principal chief commissioner, principal commissioner, commissioner, additional, joint, deputy, assistant. This is at the assistant level. This is the level at which IRS is appointed. Okay. Then below it's ITO. Similar to the assessment wing, there is a investigation wing where we have equivalent to PCCIT, Principal Chief Commissioner. Equivalent to that, I have Principal Director General of Income Tax. Then below PDGIT, DGIT, Director General. Then below him, there is PDIT, Principal Director of Income Tax, instead of Commissioner. Then Director of Income Tax. Then similarly, Additional Director, Joint Director, Deputy Director, and Assistant Director. Then below Assistant Director, there are ITOs, Income Tax Officers. Okay, so you understood the hierarchy. Not very much relevant from an exam point of view, but it will help you to appreciate the subsequent provisions. Okay. Now here comes the concept of AO. Who is an AO? AO is a person who does assessment. Okay. So by definition, the two officers who are dedicatedly for this are DDIT, ADIT, and DCIT, ACIT, deputy and assistant commissioner or director, as the case may be, are dedicated for the doing the assessment of people, or the corporate or the assessees. But ITO can also be AO if directed by the CBDT, and joint and additional officers can also be AO if directed by the CBDT. Okay. These two officers, assistant and deputy, are all dedicatedly for due to the assessments are called assessing officers. In our lecture, will come this: the principal, chief commissioner, and commissioner as the most senior officers. I need to take, I mean the tax officer would need to take approvals from these officers at multiple times. So instead of quoting the entire 4 or 5 designation, I'll quote senior officer. Whenever I say senior officer, it would mean principal chief commissioner, PCIT or CIT, and similarly PDGIT, DGIT or PDIT or DIT. Okay. If you see, all these income tax authority represent an individual. Yeah? There's a designation which is occupied by an individual, except the CBDT. It's not a single individual, it's a board comprising of chairman and members. Okay. So CBDT is also an income tax authority. Okay. So a question may come, which of the following is an income tax authorities? ITAT, DRP, Authority for Advanced Ruling, or CBDT? If you see, none of these are individual, but the right answer is CBDT. All these three are not income tax authority. So wherever in the act the word income tax authority is written, you will understand by that word that it means CBDT and officers below it, we just discussed. Skip. Then comes section 117, 118. Not very much important from exam point of view. What does this say? They say that central government has the power to appoint any person as income tax authority. So who appoints income tax authority? Central government. But central government may also authorize CBDT or senior officers. See, you see, we call senior officer or the senior officer, what they look, to appoint any income tax authority below the rank of assistant commissioner. See, I told you that IRS are appointed as from assistant commissioner. They start from their career from ACIT, Assistant Commissioner of Income Tax. So CBDT, central government has the power to appoint any income tax authority. It can authorize CBDT or the senior officers to appoint other income tax authority, but only below the rank of ACIT, means ITOs or inspector. And from ACIT, it's the UPSC cadre that will be appointed only by the central government. Okay, so if you know this, it's easier for you to remember. CBDT can also authorize any income tax authority to appoint any ministerial or executive staff which will help them in performance of their duties. So they can have their CBDT can authorize the income tax authority to appoint any person to help them in their normal duties, day-to-day duties. Okay. And CBDT may direct that any income tax authority shall be subordinate to such other income tax authorities. So this is the power of CBDT. Now, the main power and the most important section for this chapter is section 119. What it says? It says the power, it empowers the CBDT to issue order, instruction, or direction. So whatever you see, the notification, the circulars issued by CBDT, the power to issue such notification or circulars are derived from this section, section 119. Section 119 gives the power to CBDT to issue an order, direction, or instruction. And mind it, very much important, that such order, direction, instruction shall be binding on all the income tax authorities below CBDT. So whenever the CBDT says it has to be followed by all the income tax authorities. Okay. So whatever direction, order, instruction issued by the CBDT, it's binding on the income tax authorities. Nowhere it is written that the order has to be complied with the law. So even if the order, direction, instruction deviate from the provisions of the Act, still it is binding on the income tax authority. This is to maintain the discipline in the income tax department. So whatever the CBDT says, it has to be followed by the income tax authorities below it. Okay, but Section 119 says that CBDT cannot issue any order, direction, or instruction so as to require any income tax authority to make a particular assessment or to dispose of a particular case in a particular manner. That's the prerogative of the officer on the chair. CBDT cannot interfere with that power. CBDT cannot dictate any single officer to do the assessment in a particular manner, to do a particular assessment in a particular manner. Okay. Similarly, CBDT cannot interfere with the powers of appellate authority, Joint Commission of Income Tax Appeal, JCITA or CITA. So, CBDT cannot pass any order, direction, or instruction to interfere in the discretion of CITA or JCITA in its appellate function. So, the JCITA or CITA, though are income tax authority, they are not bound by the orders of CBDT to the extent in respect of exercising their appellate function. They are bound by the administrative orders. See, if the CBDT issues a circular and says deduction A shall not be allowed, you know, this circular is mandatory, is binding on the AO, assessing officer, but is not binding on the CIT appeal or JCITA when they are disposing of an appeal. Okay, because whether a deduction is allowed or not, it has to be governed by the provision of the Act. But AO is bound by that. Now, take another example. CBDT issues the order that the appeal which are pending for more than 5 years shall be disposed of within 6 months or shall be disposed of early before the appeal which are less than 5-year-old. So this is not a order which interfere in the exercise of appellate function of CIT appeal. So CIT appeal is bound by this order because this is an administrative order, but it's not bound by the order which interfere in its appellate function. You understood? Okay. Assuming CBDT issues an order or circular which deviates from the law. Okay, from the provisions of the Act. Then such circular can either be beneficial to assessee or non-beneficial to assessee. So if the circular is beneficial or if the circular is non-beneficial, AO is bound by it. AO has to pass the assessment order in accordance with the circular, even if the circular deviates from the law. But since it's the circular issued by the CBDT, it's binding on the AO. Now, if it's a beneficial to assessee, AO will follow that circular and allow the deduction. No appeal against such order of AO. Why? Because AO cannot go against the go in the appeal against its own order. And assessee will, of course, will not find an appeal. Why? Because the order is in benefit of assessee. But if the circular is not beneficial to assessee, though it deviates from the provisions of the Act, AO will still follow it and pass an assessment order. Assessee will file an appeal to CIT appeal or JCIT appeal as the case may be. And because these circulars are not binding on assessee, they are binding on income tax authority. Assessee is not an income tax authority, we just discussed. And CIT appeal, while disposing of the appeal, is not bound by circular, and therefore CIT appeal will do as per the provisions of the Act. Okay. Now, the board may issue guidelines which are not prejudicial to the assessee, may issue guideline, principle, or procedure to be followed by the authority in the work related to assessment, collection of revenue, or initiation of penalty. So, for the proper administration of the Act, the board may issue any general special order which are not prejudicial to the assessee. Okay. Now, reserved for the benefit of assessee. Board may, for avoiding genuine hardship, ask or mandate or direct any income tax authority except the JCIT or CIT to admit any application or claim for exemption, deduction, or any relief under this Act after the expiry of the period specified under the Act. So, if Act provides any period by which such relief or such exemption is to be claimed and assessee files the claim after such period, after the prescribed period, then CBDT may condone the delay and may direct the income tax authority to admit such application of assessee for avoiding genuine hardship. Similarly, if there is some condition under Chapter 4 means the heads of income, or Chapter 6A means the deduction. If there are some condition in the Chapter 4 or 6A and assessee is, then CBDT can relax those conditions and admit the claim, provided assessee was prevented by sufficient cause and the reason for not complying with such conditions are beyond the control of the assessee, and assessee had complied with those conditions before the completion of assessment. Okay. Now, one of the very important thing comes here, if there is a delay in filing return of income. Okay. If there is a delay in filing of return of income, then what are the consequences? So, two consequences which are really quite harsh are that one, assessee cannot claim the refund, and two, if there is a loss under PGBP capital gain or horse process, then such loss cannot be carried forward. Okay, so these two are major setbacks and major consequence of delay in filing appeal, delay in filing return of income. Now, under Section 119, it says CBDT can admit an application or claim for any relief under this Act. So, condonation of delay in filing return comes under this clause, relief under this Act, and CBDT may condone this delay and allow the loss to be carried forward or may admit the refund claim. And the power to condone the delay in filing return of income has been delegated by CBDT. And the power is, if the claim amount, what do you mean by claim? If there's a refund, then the refund amount, or if the claim is in respect of carry forward of loss, then the loss amount. So if the claim amount is up to ₹1 crore, then the delay shall be condoned by CIT / PCIT, Principal Commissioner or Commissioner. If it's from 1 to 3 crore, then delay shall be condoned by Chief Commissioner. And if his delay is more than if the claim amount is more than 3 crore, then delay is condoned by Principal Chief Commissioner of Income Tax. So, depending upon the quantum of the claim, you can make the assessee can make an application to the respective authority requesting to condone the delay in filing return of income. In one of the case, what happened was that it's in the study module only. Assessee was trying to file the return of income on the last day, 31st October, and due to some technical error, he was not able to file the return, and he was finally able to file the return only at 1 a.m. in the night on 1st November. So it immediately files an application with the respective authority requesting to condone the delay, because the delay was on account of technical, which is not on account of some maleficent intention of the assessee. And the court said it's a genuine hardship, and the respective authority, whosoever it is, depending upon the quantum of the claim, should condone the delay of 1 hour. So there is only a delay of 1 hour. It should be conduct. Okay. Also, there is a time limit by which you can file an application for condonation of delay in filing return of income. This is 5 years from the end of relevant assessment. Okay. So this was something about income tax authorities. We discussed who all are income tax authorities, how they are appointed, and importantly, power of CBDT to issue order, direction, or instruction. Okay. Now, there's a concept of taxpayer charter, not very much important from exam point of view. It says there's a charter drawn by the CBDT. It provides rules and responsibility, rights and duties of the department, as well as rights and duty of the assessee. So it says that department should act promptly, swiftly. Department should help the assessee, should give the refund timely. And for assessee, it says the assessee should pay the tax timely, should file its return timely. It's all this normal things. Now we are moving to jurisdiction of income tax authorities. Okay. So what is the jurisdiction? So what happens in income tax? Jurisdiction is divided based on area. So there is an area. The AO is given a jurisdiction of this area. The set map area, boundary of an area, who is given a jurisdiction on this area. Now, when I say that AO has been given a jurisdiction on the area, I mean he has a jurisdiction on any business or profession which is being carried out within this area if principal place of business is in this area. So, if I say, assuming there is a Reliance, he has a factory in this area, say here, and there is another area which comes under jurisdiction of, say, AO2. He has a factory here as well. Now, this is the principal place. Then, my AO has a jurisdiction, this AO has a jurisdiction on this factory as well as on this factory. Why? Because the principal place of business, if in my area, then I have a jurisdiction all your business or premises of your business. Okay. So when I say that AO has a jurisdiction of this area, I mean he has a jurisdiction on all business and profession being carried out in this area who has a principal place of business in this area only. Okay? Also, I have a jurisdiction all such persons who reside in this area. Okay. If a person reside in this area, wherever he works, I have a jurisdiction on him. So when I say that I have a jurisdiction in an area over an area, I mean I have a jurisdiction over all premises of business profession which are being carried out by a person who has principal place of business in my area. I have a jurisdiction all persons who reside in this area. So AO vested with the jurisdiction of any area, he shall have jurisdiction of following person. Any person carrying out business profession, if principal place of business is situated in that area, any other person, he will resides in that area. Also, the AO would have jurisdiction on income accruing, arising, or received in this area. Okay, this will have in my search chapter. So when I will do the search, I'll discuss this. That who has a jurisdiction of the assessee. Okay, now there is a question as to the jurisdiction of AO. The assessee challenges the jurisdiction of AO. He says that you are not my AO. My AO is someone else. So I don't like you. I like someone else. I challenge that you are not my AO. My AO is someone else. समझ आ रहा है ना? You're getting my point? So if the assessee challenges the jurisdiction of AO, then that question shall be answered. That question shall be decided by the senior officers. Whenever it says DGIT, CCIT, or CIT, it includes the principal thereof. So it includes DGIT, it includes PDGIT as well. Wherever it is in CCIT, it includes PCCCIT as well. Wherever it is in CIT, it includes PCIT as well. So they both work same. They both have same work, है ना? एक ही तरह काम करते हैं. Okay, you're getting my point? Yes, sir, we are getting a point. So whenever you challenge the jurisdiction of an AO, that question shall be decided by the senior officers. And if you challenge the jurisdiction of the senior officer only, then they are matured enough that that question shall be decided by the senior officers themselves. Or if they cannot decide, then it will be decided by the CBDT or by any other senior officer notified by the CBDT. Okay. And of course, an higher rank officer can do the work, shall have all the powers of a lower rank officer. Okay. So what a ACIT can do, of course, the DCIT and JCIT can of course do. Power to transfer cases, section 127. If a case is to be transferred from one AO to another AO, then if both the AOs, both the assessing officer are subordinate to the same senior officer, then the order of transfer shall pass by the senior officer. However, if both the AOs are subordinate to different senior officers, both come under different CITs, then the senior officer, the CIT, who is transferring the case shall pass the order if both the senior officers agree. If they don't agree, then the order shall be passed by the CBDT or by such senior officer notified by the CBDT. But before transfer a case from one AO to another AO, an opportunity of being heard shall be given to the assessee. But such opportunity, and the senior officer shall also record reason for making such order for transferring the case, reason for transferring the case. However, opportunity shall not be required if both the AOs sits in a same city, locality, or place. Okay. Once the case is transferred, then the successor, the new AO, starts the proceeding from the stage it was left by the predecessor. Okay. But now, change of incumbent of an office, section 129. So the AO has not been transferred, but my AO as a person has been changed. In such case, the successor will take up the proceeding from the stage that left by the predecessor. But assessee may request that the old proceeding may be, or any part of it may again be opened, or I may again be reheard. Okay. Then there faceless jurisdiction of income tax. Now you know most 80 to 90% of income tax is faceless. So the central government has made a scheme of faceless proceedings in a view to provide greater efficiency, transparency, and accountability. So what are the three pillars of faceless? They eliminate the interface between the department and the assessee to the extent technologically feasible. They optimize utilization of resources by invoking economies of scale, and they make team-based assessment where one or two officers concurrently work on a similar case. Okay, so there's a dynamic jurisdiction. This was about the jurisdiction of A. Now we will discuss about the powers of income tax authorities. Very much important. This in the chapter of income authority, the one section which we discussed, section 119, power of CBDT to issue direction order instruction is important. Now the other thing is important which we are discussing now. Section 131. It says income tax authority, every income tax authority, not below the rank of assistant. Now you're getting the point. It has given the power only from the assistant, not to the ITOs, because assistants are UPSC cadre or DRP, or not any authority, not to the rank of assistant, of course, notified by board in respect of section 90 or 98, double taxation avoidance agreement, shall have same power as are vested in code under the Code of Civil Procedure, CPC. So whatever power has in the civil code, all such power shall be vested with the income tax authority as well, not below the rank of assistant. And what are these power? Power discovery and inspection. They can discover and inspect. They can enforce the attendance of any person and examine him on oath. They can compel the production of books of account, and they can issue commission. Issuing commission means they can nominate a person who will have all this power and go and examine the person. So what happens is that, assuming there is some ill person and such person need to be examined on oath, so the court doesn't ask such person to come to the court. Rather, court nominate a person who act as a court and takes the takes the submission and takes the submission from such person at his own place. Okay. So there are four powers in section 131, which is discovery inspection, compelling the production books of account, enforcing the attendance, and issuing commission. This power can be exercised even if no proceedings are pending against the person against which these powers are being exercised. Now, section 131(1)(3) give a power to impound books. Similarly, the authority is same. Income authority, not below the rank of assistant DRP, may impound and retain in his custody any books of account or other document, but he can retain only up to 15 days. But he has to record the reason for doing so, and he can retain only up to 15 days. If he wants to retain for more than 15 days, then he needs the permission of senior officer, Vadde law. Now, the next power is section 133. We have missed section 132 and 132. Because 132, the search, we'll discuss immediately in a minute or two. 133 is calling for information. So in this section, what the AO does, he requests the banks or any other, maybe the credit card companies, to give a list of person who have deposited, withdrawn, expended, and any amount beyond a particular sum, whatever the AO wants to check. So by this, he collects the information. He writes to the property registrar and ask him to give him the information of the property registry beyond this amount, whatever amount. So where he asked under section 133. So under section 133, an AO, JC, JCITA, CITA may sort the following information from following persons. So they may ask the firm to give name, address, and profit share of their partners. They may ask the HUF to give name and address of their members. May ask a trustee, guardian, or agent to give name and address of the person for whom he is a trustee. May ask any person, any assessee, to give name and address of all such persons to whom the assessee has paid rent, interest, commission, royalty, brokerage, or any annuity amounting to more than 1,000. Together, particular of such payment. It may ask any stock or commodity broker or dealer or agent to give the name or address of the person to whom the exchange has given some money or from whom the exchange has received some money, and also detail of such payment and receipt. Okay. By which he will get the information if there is some tax evasion or not. The most important part is here, section 133(6). In this, an income tax authority, of course not below the rank of assistant, may require any person, including an official of a banking company, to furnish any information which may be useful in any inquiry or proceeding under the Act. So he may ask any person to give information which may be useful in even an inquiry. So there is a, say, Mr. A who has an account in SBI. So even if no proceeding have been started against Mr. A, the officer can write to SBI and ask for the bank statement of Mr. A. Okay. Because such bank statement may be useful in the inquiry against Mr. A. But if in case when no proceeding is pending, the above can be exercised by the investigation wing, the entire investigation wing, or chief commissioner or commissioner of an officer below the commissioner with the approval of the commissioner. Okay. Now 133B, when it is used because when, see, in the case of assessment, when assessment is going on for the AO may want its inspector to physically visit the any particular site, maybe the site of, maybe the office of the assessee, or maybe the office of a debtor or creditor of the assessee, and whatever. So section 133B gives a power to AO to nominate an inspector for this thing. Now see what section 133B says. An income tax authority may enter, it says income tax authority may enter any building or place within the area assigned to him, or any building or place occupied by a person in respect of which he exercises jurisdiction, at which business or profession is carried out. So under 133B, you can only enter the business or the professional place. You cannot enter the residence of the assessee. Whether such place is a principal place or not, and collect information. You can only collect the information. The authority can enter only when such place is open for the conduct of business or profession. Okay. Under 133B, income tax authority cannot impound. It cannot impound any books of account or the document or any stock or valuable article or thing. And for the purpose section 133B, income tax authority includes an inspector who has been authorized by the AO. Okay. 133C, it is a section where the AO can get the information which is in his possession or which may be provided by the assessee, may get it verified. Yeah. The income tax authority, for the purpose of verification of information, may issue a notice to such person requiring him to furnish any information and document. Okay. Now comes survey. So see, my dear friends, you are with me? It is getting heavy. Is it? Tell me. Are you able to understand? Yes, sir, we are able to understand. Okay, good. So, अभी तक तो हमने छोटा सा ही पढ़ा था. We discuss only small part. We'll discuss the main thing now. There are two things. Two main powers of income tax authority. One, to search, weight डालना. And उसी का छोटा भाई है, the younger brother of search, survey. So what are the difference between search and survey? In search also, the income tax authorities go and raid a place. In survey also, they go and visit the place of the assessment. The most important difference is that in search, you can see the cash, jewelry, and valuable articles. But in survey, you cannot see. Seizure is not allowed in survey. The most important difference. Okay. In both these cases, you visit the place of the assessing. Search is the ultimate power, the nuclear bomb, with the income department, and survey is limited. Okay. So first we'll discuss a small, the younger brother, the survey. Power to survey, section 133A. Do we need to remember section? No, you don't need to remember section. You need to remember what the section says. What does an income tax authority, what power does income tax authority have in section in the case of survey? An income tax authority may enter any place within the area assigned to him, or any place occupied by a person in respect of which he exercises jurisdiction, or any place in respect of which he is authorized by any other officer who exercises jurisdiction over the area in which such business is carried on, or who exercises jurisdiction over a person, then that officer may authorize any other officer. I explain you. See, this AO1, he exercises jurisdiction over here, so he can enter any place within his area, or he can enter even in a premises, in a building outside area if such building is occupied by a person in respect of which he exercise jurisdiction, meaning thereby is this building is occupied by a person who resides there. Okay. Now assuming if AO2 who has jurisdiction over this area, then AO2 may authorize AO1 to do a survey in this area as well. Okay. So he can do a survey in this area if authorized by the AO of this or AO having jurisdiction over this area. And he can of course do a survey within his own area. He can do the survey in the area of other AO if authorized by such other AO, or he can do a survey in his own area. Okay. But the survey can be done only at the place where business profession is carried on or some charitable activities being carried on, like charitable organization. Where such place be the principal place or not. So survey at first instance cannot be done in the residence, and survey cannot be done for religious organization. It can be only on the charitable organization. Okay. Who can do the survey? No action of this section can be taken by officer below the rank of JC without the approval of DGIT or CCIT. Okay. Now, what the assessing officer does in this section, what he can do, what all powers he has. So, upon entering such place, the officer can inspect any books of accounts, place mark of identification on such books of account, make copies therefrom. He can impound such books of accounts after recording the reason. He can check or verify the valuable thing, cash, jewelry, or other valuable article or stock. He can make an inventory of such things. He can record a statement of a person. Okay. See, he can inspect the books of account or impound. But in respect of valuable article, he can only make an inventory. He cannot seize. You understood? There's a difference between survey and the search. Books of account or other document can be retained for more than 15 working days if approved by the senior officer. You already know. But see, I told you at first the survey can only be done at the place where business profession is carried on. But if it is found that some books of account or some valuable article are situated in some other place, then survey can extend to such other place as well. If books of account or other assets relating to business or charitable purpose are kept at some other place, then such other place can also be covered under survey. And such other place can also be the residence of the assessee. Okay. There is entry restriction, there is restriction by when you can enter the premises. There is no restriction on exit. So if a business profession is being carried on at such place, you can enter only during the time when such place open for such business profession, only during the business hours. In case of any other place, you can enter after sunrise and before sunset. Okay. But there's no time to exit. You can do a survey of any function or ceremony or event also, but you can do survey only after the conclusion after ending of such function, ceremony or event. There is also a concept of a TDS or a TCS survey. So what is the TDS survey? TDS survey is conducted, or TCS survey is conducted to check whether the assessee is properly directing or collecting the tax. But here, you cannot even impound the books and you cannot see the valuable article. Even if it's there in front of your eyes, you have to close your eyes. Because of TDS survey. No, sir. Officer jata hai and he sees, oh, so much gold. No, sir, you cannot see this. The assessee can say that you cannot see this. An income tax authority can conduct a survey for the purpose of verifying as to whether TDS or TCS has been properly directed or collected. In this case, the authority can enter only after sunrise and before sunset. The authority can inspect books of account and record statement, but it cannot impound or cannot make inventory of valuable article. And also, TDS surveys can only be done on business professional place only. It cannot be done on charitable institutions. Okay. If there is a person who is there and who is not affording you, who is not allowing you to enter, who is not giving you the proper facility to do the survey, then the authority can invoke its power under section 131, the four power of civil code. Yeah? Discovery and inspection, production of books of account, enforcing the attendance, and issuing commission. Can invoke this power against such persons. Okay. Now we come to a search, the raid, for which the income tax authorities are popular. So in this, there are two things: authorizing officer and authorized officer. So you're with me? You're understanding the things? Good, 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 good. So who are authorizing officer? The one who authorize another officer, the junior office, to do a search. Authorized officer means the person who actually do a search, who has been authorized to do a search. So who can be the authorizing officer? Who can authorize search? The senior officers, CCIT, DGIT, CIT, and DIT. The additional and joint also if empowered by the CBDT. And they may authorize any AO. AO means ITO, ACIT, or DCIT, or ADIT, or DDIT. And the AO to authorize for authorized officer. Simple. On whom such can be authorized. So on whose assessee, on whom person, or on who all persons can such be authorized. So if there is a reason to believe that a notice has been issued under section 142(1), requesting for the return of income or document, or a summons under section 131 has been issued and such person has not complied, or there's a reason to believe, the authority has a reason to believe that had this notice is been issued, notice under 142(1) or 131, then such person shall not comply. So notice has not yet been issued, but they believe that if we issue this notice, then such person shall not comply. So don't waste time in issuing notice. Do right away search. Okay. Or they have reason to believe that the person is in possession of any money, bullion, jewelry, or the valuable article, and such assets, such valuable articles, such money, bullion, jewelry, forms income, form part of the income of the assessee, which either he has not disclosed, or he has reason, the authority reason to believe that the assessee will not disclose. Either he has not disclosed, or we believe that you will not disclose or will not disclose. Then in both these cases, the authorizing officer can issue such warrant, can authorize an officer to do search on you. Now, what are the power of authorized officer? Do whatever you want to do. You have seen a lot of these things in a movie. So he can enter and search any building, place, vehicle where he reason to suspect. He suspects. Reason to suspect is a lighter word of reason to believe. He need not to have a reason to believe. He just has a doubt that the books of accounts or the valuable article may be kept in such building, vehicle, place, or aircraft. Then he can enter. If such place is locked, then you can call Daya gate Toro. You can break open the lock, break open on the door if keys are not available. You can inspect books of account. You can place marks of identification on such books of account and make copies. You can make an inventory of all such valuable articles. You can search any person who has gone out of such place or about to get into or is in such place if you have reason to suspect that such person is hiding some books of account or valuable articles. You can require any person who is in control of documents stored in electronic device, means who is in control of laptop or computer, to provide you facility to inspect such book of accounts. You can seize, this is important, any books of account and money, bullion, jewelry found during search. So this makes it different from the survey. However, stock cannot be seized. So if you search a jeweler, you cannot seize the jewelry held as a stock in trade. And you can examine any person on oath. Okay, understood? Now we are discussing some small points related to search. There is a concept of deemed seizure, constructive seizure. Deemed seizure means This is not actual seizure. The officer has not actually seized the goods, but he has passed an order, and he has by this order instructed you that you will not deal away or part away this goods or otherwise deal in this goods. Okay. So if there are some goods which cannot be seized because of WDV. What does it mean by WDV? Because of their weight, their dangerous nature, or their volume. Okay. Because of WDV, some goods cannot be seized. Then the officer can pass an order, deemed seizure, constructive seizure order, and direct the assessee or any person who is in possession of these goods to not to deal with it. This order is equivalent to the actual seizure. Okay. Of course, since the stock in trade cannot be seized, so this constructive seizure or deemed seizure order cannot be passed against the in respect of stock in trade. Now there is another type of order called prohibitory order. Order of restraint. What do you mean by this? Prohibitory order means I am not seizing your goods. What happens that, say, a search happens at my place and I live with my brother. Okay. There is a room of my brother also in my house. A search happened at in my house. So they also searched the room of my brother. And there they found some jewelry. Okay. And my brother discloses the source of this jewelry. It says that this jewelry is properly disclosed in the return of income furnished by my brother. But there is a doubt in the mind of the authorized officer, officer who has come for the search. So what he does is that he passes a prohibitory order. He cannot seize this gold because this gold does not belong to the assessee against which the search warrant has been issued. So what he does is he passes a prohibitory order against my brother and ask him to not to deal with it, to not to remove this gold, till the time this prohibitory order is active, is live. The life of this prohibitory order is only 60 days. After 60 days, it automatically lapses. Okay, so you understood the difference between the prohibitory order and the deemed or constructive seizure. Okay. Now, assuming the fact that they are CIT who has the jurisdiction over this area. Now, the say Adani has an office in this area, but this is not the principal place of his business. He has a principal place at some other place. Yeah. So this CIT doesn't have a jurisdiction over this place. Why? He has a jurisdiction over the businesses which have a principal place of business within the area assigned to the CIT. Okay. So though he doesn't have a jurisdiction over this place, but in the interest of revenue, he can authorize an officer to do the search over this place because this place is within his jurisdiction, even though not the principal place. Okay. So it says, where any building is within the area of jurisdiction of CIT or CCIT, but such officer has no jurisdiction over the person referred above. You understood? Though building is within the area of the CIT, but he doesn't have a jurisdiction over this building. Why? Because it's not a principal place. So who has the jurisdiction over this building? The officer in whose area the principal office is situated of Adani. Okay. But still, it shall be competent for him, for this CIT, to exercise the power under this section if a reason to believe that delay in getting the authorization from the jurisdictional officer makes prejudicial to the interest of revenue. Understood? Now, next example is assuming there is Adani has a principal place of business in Bombay. Okay, Bombay. And Adani also has a building, has an office in Madras. Now, on this office of Madras, who has a jurisdiction? The officer having the Bombay CIT, because he has the jurisdiction over the principal place. Then he has a jurisdiction over all other business premises of Adani. Now he exercises power and he authorized officer to do a search on Adani. And he issued search warrant against Adani. The search warrant shall be issued for his principal place and for also a place for also the building in Madras. Okay. But in such a warrant, there is a reference of the building in Madras. But while in Madras, the officers, the search team found that there is another office in Madras itself, which is not listed, which is not there in the search warrant. And they feel that some important documents or some valuable things are kept in such other office. Then, instead of asking for the authorization from the Bombay CIT, they can ask for the authorization from CIT Madras to search this building as well. You understood? Though the CIT Madras doesn't have a jurisdiction over this building, but still in the interest of revenue, they can exercise its power. So, where search has been authorized by CIT and some other CIT not having jurisdiction on the assessee has reason to suspect that any books of account of the assessee are kept in any building, not mentioned in the search warrant, he may authorize the authorized officer to search such building. Okay. Of course, the search team can ask for the help of the police officer or any other central government employee. Why they ask for the help of police officer, you already understand this, very much logical. And when they need the service of a central government employee to act as a witness that the proceeding was conducted in a fair and a justified manner. Presumption. So there are some reputable presumptions. There are some presumption. Presumption means the law presumes something. So this is the reason I'll tell you. So what are the presumptions? The presumption is whatever we found in your premises, the books of account or valuable article that belong to you, the person, the content of such books of account are true, the signature are of the person for whom it looks like, the document is attached by a particular person, it's presumed that it is actually attached by that person. So when a search party comes, whatever they found within your premises, it is presumed that you own that. But this presumption is immutable. If you can prove on facts that no, I don't own it, the owner is someone else, then you can prove. But at first, it is presumed that you own that. That's why we always say, before search, you search the search party. The assessee search the search party before the search party search the assessee. Yeah, quite tricky. The assessee search the search party before the search party search the assessee. Because if assuming a search party comes with a small note, and once the search begins, it throws this note somewhere and then again finds such note and says that the content of this note are true, I will presume it, and whatever is written is true and it's your note. So before the search start, the assessee search the search party so that they have not brought anything against the assessee. Of course, the assessee can make the copies of the documents seized. Okay. Now, if some documents or some valuable things or articles are found which belong to some other person, then the authorized officer shall hand it over such documents or such valuable article to the jurisdictional tax or assessing officer of such other person within 60 days from the date of conclusion of such. Okay. Now, there are two more powers. One is that the assessing officer can, within 60 days from the date of conclusion of search, provisionally attach the property belonging to the assessee if he believes that it is necessary to do so in the interest of revenue. But such provisional attachment is only operational for 6 months. After it is automatically vacated. And also, the officer can refer the valuation of any asset seized within 60 days from the conclusion of search to the valuation officer. And such valuation officer shall give its valuation report within 60 days of the receipt of such reference. Okay, the reason to believe or reason to suspect shall not be disclosed. The authorities are not under an obligation to disclose such reasons to any other income tax authority, to assessee, or even to the ITAT. Such reasons can only be disclosed before the court. This is for the safety of the person who has given a tip to the income tax officer. If the North Indian students has seen the movie Raid, then they can relate it. Okay, the process for provision of Code of Criminal Procedure within search and seizure applicable to the search and seizure conducted under Income Tax Act. Requisition. What is requisition? See, I as an income tax officer, as a CIT or CCIT, have an information that there is a person who has some undisclosed income. I want to search that person. But before I search, I send my team some other officer from under any other office, maybe the ED, Enforcement Director, the CBI, or any other FEMA, whatever, some other office, Election Commission, anything. They do the search and they seize the books of account and the assets. Before Income Tax Department do the search, some other department does the search and sees all the things. Then I will authorize an officer. I will call him requisitioning officer. Yes, authorize an officer and direct him to get the books of account and the assets seized from the other department once their work is over. So this is called requisition. It's equivalent to the search. It will be deemed that I have searched that assessee. If I'm requisitioning, I'm placing a requisition request on the other department to give me the books of account of the assets seized, then it is deemed that I have searched the assessee. All such provisions are applicable, as we have studied. Okay. Now, the books of accounts which I have impounded, we have seized and as such, what I need to do with this. So I have to release the books of account within a period of 1 month from the end of the quarter in which the order of assessment of search has been passed. However, I can retain the books of account even after this time, but for that I need approval of the senior officer. And senior officer can give me the approval only to retain the books of account up to the closure of all proceedings, including penalty proceedings. But assessee can challenge the approval of senior officer before the board, and then the board decide as it thinks fit. The important part is what to do with the assets, the valuable article, money, bullion, jewelry, seized during the course of search. So such asset has to be utilized for making the payment of existing liability under the Income Tax Act or under the Black Money Act. The advance tax of the current year doesn't come under the definition of existing liability. So if there is any outstanding liability of the assessee under the Income Tax Act or under the Black Money Act, the money which is so seized shall be utilized for making good such existing liability. Okay. And such money shall also be used to make the payment of tax, interest, penalty, or fee arising out of the assessment of the search. So any amount of liability determined on completion of block assessment and the assessment of the year in which search is initiated or acquisition made, including penalty, interest in connection with such assessment. So whatever amount becomes due on the basis of assessment, or if there is any existing liability, both these things can be recovered from the asset seized. Okay. But if if assessee can make an application within 30 days from the end of the month in which the asset was seized, and he explains the source and nature of the asset to the satisfaction of the AO, then such asset can be released with the prior approval of CIT or CCIT after adjusting only the existing liability, and such release has to be made within 120 days from the date of conclusion of such. Okay. So, order of application of asset seize. So, if the department has seized money, the cash, and also some jewelry or some other valuable article, then it will first apply the money for the recovery of existing liability or the amount becoming due on assessment. Then he can, if that money falls short, then he can save the assets, and if the asset remain even after recovering everything, then shall be returned to the assessee. But department will also pay interest at the rate of 0.5% per month, part of the month. On which amount? On the money seized plus sale proceed of the asset minus existing liability minus the amount which becomes due on the assessment. You know, minus the amount already released to the assessee. So whatever amount remains, the central government shall pay interest at the rate of 0.5% on this amount, the remaining amount, and such interest shall be paid after 120 days from the date of conclusion of such, till the date of completion of assessment. So this is important part. What happens is that if the department sees say 100 crore of cash and say 10 kg of gold in a fetch from assessing, then what one thing is that assuming there is existing liability of 120, existing liability against the assessee. So what the department will do? Department will adjust 100 crore against his 120 crore. Only 20 crores left. Then the assessee explains the nature and source of acquisition of this gold. Then what the department will do? It will release the gold only after recovering this 20 crore. Whatever remains, it will release within 120 days. Okay. Because this 20 crore is part of existing liability. Okay. Assuming the department get this gold sold out, and it collects say rupees 50 crore out from the sale of this gold, and department doesn't release the gold within 120 days, then and doing the search in the assessment of search, a liability of say 10 crore also comes. Then the central government is required to pay interest on, see how much amount is put. It gets 100 crore of cash, 50 crore from the sale of gold. It has released nothing, and the liability is against these assets are 120 plus 10, 130 crores. So the central government shall be liable to pay interest on 20 crores. You with me? Okay. So this completes our chapter income tax authorities. Now we'll move to the next topic, return of income. You're with me? You're with me? Yes, sir. Yes, sir. I tell you, the class will be a little bit heavy today. So now we are doing the most simple topic which we have done in IPCC as well, and we know it by heart. We have done a lot of these things during the articleship time as well. Okay. So, section 139(1). Who all are required to furnish return of income? You know it by heart. Sir, this is so basic. Don't waste our time. Just give me 10 minutes and I'll complete this. Okay, fast. So who all are required to furnish return of income? Every company and every firm include LLP is required to furnish return of income in all circumstances. Any other person is required to furnish return of income if their total income without giving effect to the deduction and capital gain exemption exceed the basic exemption limit. But if you are ROR, then you are required to furnish return of income if you are beneficial owner of any asset located outside India, or you are a beneficiary of any asset located outside India, or you are a signatory of any bank account outside India. Okay. But you are not required to furnish a return of income if you are only beneficiary of any asset located outside India, if the income from such asset is includable in the hands of a person referred in A above, beneficiary. And such person is furnishing return of income. Who is the beneficial owner? Who has actually paid the consideration directly or indirectly? Who is the beneficiary? Who actually enjoy the benefit of the asset but has not paid the consideration. Okay. So a person is still required to furnish return of income even if he does not fulfill the above two conditions. If he has made a deposit of 1 crore, more than 1 crore in current account, or more than 50 lakh in the saving account. He has incurred an expenditure of more than 2 lakh on foreign travel, or more than 1 lakh in for electricity consumption. The turnover of the business exceeds rupees 60 lakh, or turnover of the profession exceeds rupees 10 lakh, or the aggregate of TDS in his case is 25,000 or more, or 50,000 or more if the assessee is a senior citizen. So you satisfy either of these conditions, you are required to furnish return of income. Okay. In addition to company or firm, there is the universities, college, association, institution referring section 35, business trust and investment fund. They are also required to furnish return of income in all cases, irrespective of their income. Okay. Now, the due date of furnishing return of income. If you are a company, then 31st October. If you are a person who is required to get his books of account audited, again 31st October. If you are a partner of a firm whose accounts are required to be audited, 31st October. If you are a spouse of such partner and you are governed by provision section 5A, 31st October. Then 30th November, if you are required to furnish a TP certificate, or you are partner of a firm who is required to furnish a TP certificate, or a spouse of such partner, then for all the three, 30th November. In any other case, salary etc., 31st July. Okay. Then 139.3 is a loss return. It says if the return is not furnished within the due date, as we studied above, then the loss under PGBP, capital gain, and owning and maintaining resources cannot be carried forward. 139.4, the belated return. Even if the return is not furnished by the due date, you can furnish the return within a period 3 months prior to the assessment year, means 31st December of the assessment year, or before completion of assessment, whichever is earlier. 139.5, revised return. You can revise a return already furnished in section 139.1 or 139.4 by 3 months before the end of assessment year, meaning 31st December assessment year, or before completion of assessment, whichever is earlier. Return can be revised to correct, to rectify an omission or wrong statement. 139.8a, update return, we will study in a minute. 139.9. Okay, we have discussed this defective. 139.9. So if a return has been furnished and AO found that the return is defective, he shall intimate the defect to the assessee. The assessee shall rectify the defect within 15 days of intimation. This 15 days can be extended on a request of the assessee. But if the defect is not rectified within the 15 days or the extended period, then it is deemed that the return has not been furnished. What are the defects? If the return, all the columns, annexures, statements in the return form has not been filled, return is not accompanied by the computation, tax audit report, cost audit report, proof of TDS, or proof of payment of tax under section 140B, not 140A. 140B is a self-assessment tax for updated return. Okay. If you're doing business profession, then return must be accompanied by the manufacturing, accounting, and P&L account, and a balance sheet. In any other case, return is accompanied by the amount of turnover, gross received, cost, profit, expenses, and net profits. This is 139.9. Now, modified return, section 170. but it says that there's a business reorganization. So amalgamation or a merger happens, and that amalgamation merger happened with effect from 1st April 25. Say, but the order of merger comes, say, on 30th September 26, and is effective from 1st April 25. And by this time, by the time order comes, the successor company, the amalgamated company, has already filed its return of income as a standalone entity. But now, since the merger is effective from April 25, the return needs modification. So this section 178 says that in such case, the successor will file a modified return and can file the modified return by when? By 6 months from the end of the month in which order comes. Okay. And if the assessment of the successor is pending, then the AO shall consider the order, the merger order, and the modified return before completion of assessment. And if the assessment has already been completed, then the AO shall also modify the assessment order, considering the order, the merger order, and considering the modified return furnished by the successor company. If the return is not filed or there is a delay in filing the return, then there are penal consequences. There are fee of under section 234F. Fee of amount of rupees 5,000. And if the total income is up to 5 lakh, then the fee is 1,000. Then assessee is required to pay the interest under section 234A, the interest for delay in filing return of income. Interest is 1% per month or part of the month. Interest is charged from the date immediately succeeding the due date of furnishing return of income up to the date of actual furnishing or date of completion of assessment if return is not furnished. The losses, the 3 types of losses, PGBP, capital gain, and horse races, owning and maintaining horse races. These losses are not carried forward. Deduction of section 10AA or part C of chapter 6A are not allowed. And lastly, the assessee cannot shift out of the default tax regime. He has to follow the default tax regime. Okay, we have done this and this. Also, if the assessee was required to furnish return under section 134A or 4C, then he also required to pay the penalty of rupees 500 per day during which failure continues. What is 104A and 4C? Now we will study. So these organizations are also required to furnish return of income mandatory in section 139. So 104 says that charitable or religious organization are required to furnish return of income even if their income is below the exemption limit, because in their case 100% of income is exempt. So what we say that if the income before applying section 11 and 12, before the exemption exceed, if that income, the gross income before the exemption exceed the basic exemption limit, then such trust is required to furnish return of income. Okay. Similarly, the complete income of political party is exempt, but we say if the income of political party before such exemption exceed the basic exemption limit, then such political party is required to furnish return of income. Similarly, there are a lot of organizations, associations, institutions, trade unions, and investment funds, etc., whose income are exempt, the entire income are exempt under section 10. Then they are required to furnish return of income if their income before such exemption exceeds the basic exemption limit. Okay. If they don't furnish the return, then the penal consequences shall be attracted. Now, there are persons who are not required to furnish return of income even if their income exceeds the basic exemption limit. First is non-resident of foreign company if they do only have the income from the investment fund located in IFSC. If TDS has been deducted and there is no other income, or if they only have the income from specified fund, if they have no other income, or a non-resident being an eligible foreign investor who has income only which is exempt under section 47(7)(ab), who transfer bond or GDR, then even such non-resident is not required to furnish return of income if it has no other income. Okay. But such exemption is available only if the non-resident of the foreign company provide these details: their name, email ID, contact number, the address of the country in which they are resident, a certificate, a declaration that is a resident of such other country, and their tax identification number or any other similar number of such other country. Okay. Now, a small, not much relevant, but for the completers, TRP, tax return preparers. We have seen sometimes a question of 4 marks comes, 2 or 4 marks comes, and a theory question. So, who can be a TRP? Who assists the person in furnishing return of income? Any individual who has a bachelor degree or intermediate of CA, CS, or CMA. Okay. Who cannot be a TRP? An officer of scheduled bank, which with the assessee has a banking dealing, cannot be a TRP. Or an advocate, legal practitioner, or a CA or employee of the eligible assessee cannot be a TRP. Now, who can avail the service of TRP? Who can be the eligible assessee who can get the return furnished through TRP? So only individual HUF can avail the services of TRP. That too, such individual HUF should not be required to get its account audited and under section 44AB or under any other law. And such individual or HUF should not be non-resident. Only then they can utilize the service of TRP. Now, with the return of income, you pay self-assessment tax under section 148. Hence, mandate not paying self-assessment tax does not make your return defective. You're with me? Yes, sir, we are with you. Good. So, assessee is required to pay self-assessment tax before filing return of income. How it is computed? Tax on the return of income minus TDS, TCS, advance tax, MAT credit, FTC, foreign tax credit, or relief under section 89. The remaining amount is the self-assessment tax you have to pay. Not only this, you have to pay tax along with interest and fee, if any. Okay. If the assessee fails to pay the tax, interest, or fee, he shall be deemed to be assessee in default in respect of the amount falls short. And the amount falls short, then the amount to pay shall first be adjusted against the fee, the balance against the interest, and the remaining against the tax. Okay. Now we come to the updated returns. 180. So the law allows you to update your return up to 48 months, 4 years from the end of relevant assessment year. So you can update your return up to 4 years from the end of relevant assessment year. Though there is an additional tax, we'll show that. Return can be updated whether or not you have already filed the return for such assessment year. The updated return has to be accompanied with the self-assessment tax under section 140B. Otherwise, it's a defective return. Any interest in section 234A, B, C shall be computed having regard to the tax declared in the updated return. So, in the updated return, if you have reduced the loss or if you have converted the loss into income, then it is mandatory for you to update the return of subsequent year in which the original loss was set off. Logical. When an updated return cannot be filed. An updated return cannot be filed if it's a return of loss. So, updated return cannot be a return of loss. It cannot decrease the tax liability already determined. It cannot result in a refund or cannot increase the refund already determined. Okay. An updated return cannot be revised. If an updated return has been filed for an assessment year, subsequent updated return cannot be filed for same assessment year. Updated return cannot be filed if any assessment proceeding has been initiated or has been started or completed. If any prosecution proceedings have been started, then also updated return cannot be filed. Updated return cannot be filed if AO has information under section 9090A and such information has been communicated to the assessee. Updated return cannot be filed if AO has information in his possession under the Smuggler of Foreign Exchange Management Act or Black Money Act or Prevention of Money Laundering Act or Benami Corporate Transaction Act. And such fact that I have information has been communicated to the assessee. Okay. In case of such, updated return cannot be filed for the year in which such happened and for any earlier year. Okay. So if a such happens, then you lose the right to update return for any earlier years as well. in where notice under Section 148 has been issued, then updated return cannot be filed up to 36 months. However, subsequently that notice does not communicate, does not become an assessment, then you can that notice has been was dropped. Then assessee can furnish an updated return. But updated return has to be accompanied by additional tax. And with the updated return, you pay self-assessment tax, interest, fee, and additional tax. How you compute self-assessment tax? Section 40B. Whatever tax is there on the updated return, updated income shown in the updated return, you reduce the amount already paid by way of advance tax, TDS, FTC, relief, MAT credit, or self-assessment tax paid at the time of original return. And you add the refund, if any you have got, the balance amount is the self-assessment tax. We did a good practical question on this point. But updated return is not a free of cost. You have to pay additional tax. Additional tax is, if the return is updated within 1 year, additional tax is 25%. So, more than 1 year, but up to 2 years, 50%. More than 2 years, up to 3 years, 60%, 10% increment. And up to 4 years, 70%. Okay, so this was all different types of return of income. 1, then loss return, belated return, revised return, modified return, defective return, and the updated return. Okay. Now, who shall sign the return? Very simple. Just we'll cover in a minute. And in case of individual, he will sign himself. If he is not able to sign, then any other person authorized by him. If he is mentally incapacitated by his guardian, or if he is out of India, then any other person authorized by him. HUF, the Karta has to sign. If there is no Karta, or if Karta is not able to sign, then any adult member. Partner, the managing partner. If there is no managing partner is not able to sign, then any adult partner. Any partner not being minor. LLP, similarly designated partner. If there is no designated partner or designated partner is not able to sign, then any partner. Company, MD, in the absence of MD, any directors. Non-resident company, MD, or a person holding right power of attorney. Company under liquidation, the liquidator. Company whose management has been taken over by the government, principal officer. Whose application is pending under the insolvency, IBC, court, IP, insolvency professionals. In case of local authority, principal officer, political party, chief executive officer, CEO, any other person, means any person who is entitled to act on behalf of such person. Person complained to verify. Very logical, not much important from exam point of view. Now, the PAN and the Aadhaar, not much important from exam point of view. We will focus on the important things, but still we'll do very quickly. The PAN. Who all are required to apply for the PAN? So, if your total income exceeds the basic exemption limit, you're required to apply for PAN by 31st May of assessment year. If you are resident other than individual and your financial transaction with any person exceeds rupees 250,000, then you are required to furnish to apply for the PAN. Also, the director, partner, Karta, principal officer, chief executive officer, founder, or any other person of this person is also required to apply for the PAN. If your total turnover of the business is likely to exceed rupees 5 lakh, then you're required to apply for the PAN within the financial year itself. Or your charitable organization, then you're required to apply for the PAN. If you intend to deposit, withdraw amount of 20 lakh or more in cash, then you need to apply for the PAN. Or if you open a current account, then you need to apply for a PAN. Also, you can apply for a PAN voluntary without any of this transaction. Central government may allot PAN to any person. AO may allot PAN considering the transaction of such person voluntarily. Okay. The PAN, if you have a PAN, you have to quote it in all correspondence with the department while opening a bank account or a demat account. Okay. For making application for issue of credit or debit card, selling by the time of sale of motor vehicle other than two-wheeler, sale or purchase of securities or unlisted shares for an amount exceeding 1 lakh, sale or purchase of immovable property amount exceeding 10 lakh, cash payment of more than 50,000 in a hotel or in connection with foreign travel, payment of more than 50,000 for purchase of mutual fund or debentures or a bond, cash deposit exceeding 50,000 in a day, and a payment cash deposit withdrawal of 20 lakh of more in the current account. In all these transactions, you need to remember this. You need to quote your PAN. Okay. Now, there's a penalty for not quoting or not applying of PAN of with 10,000 for each default. Aadhaar. You have to link your PAN with your Aadhaar. Okay. You have to quote your Aadhaar number at the time of applying for the PAN or in every return of income furnished by you. Okay. If you don't link your PAN with Aadhaar, then there's a penalty, section 234F, H, sorry. Your PAN becomes inoperative and no refund is issued till the PAN becomes operative. No interest will be payable during the period PAN is inoperative, and tax is deducted or collected on your income at higher rate. Okay. So this was all. These persons are not required to obtain Aadhaar, and therefore they are not required to link the PAN with the Aadhaar. A person residing in Assam, Jammu and Kashmir, and Meghalaya, NR, any person of the age of 80 years or more, or any person who is not a citizen of India, they are not required to obtain Aadhaar, and consequently they are not required to link their PAN with Aadhaar. Okay. So this completes the return of income. I told you it will take only 10 to 15 minutes. Now, after 5 minutes break, we'll start with the assessment procedure. So we are left with, for today's class, we are left with assessment procedure and the block assessment in the case of search, and lastly, the appeal and the revision. So we'll take 5 minutes break, then we'll continue with the assessment procedure. you're enjoying this revision class. If you think we are a bit faster, then it's better that you listen this class to one more time. But the intent is to be fast and so that you can cover the syllabus in a shortest possible time. You know, see, within 3 hours, if we complete income tax authority, assessment procedure, and appeal and revision, that's actually they constitute 50 to 60% of your module 3, and you only have 4 modules. If you even if you complete half of your module in 3 hours, then it gives you a lot of comfort that the subject is manageable. Okay, so we'll start with assessment procedure. We understand who are income tax authorities, what are their jurisdiction, what are their powers. Then we discuss when the assessee is required to furnish return of income, how it is furnished. Now, the assessment of such return furnished by the assessee. So, assessment starts from section 142. Rather, 142 is the inquiry. So, AO may issue notice under 142 to any person who has furnished return of income or who has not furnished return of income and time limit has expired, asking him to furnish a return or asking him to produce accounts or documents or to furnish such other information, including the statement of his personal assets and liability. However, statement of personal assets and liability can be required only with the previous approval of Joint Commissioner, and the books of account of period prior to 3 years cannot be asked. Okay. For the purpose, section 142 is not required that any proceeding is pending against the assessee. So, this is a general inquiry. Then, during the course of assessment proceeding, under section 142A, the AO may ask for the special audit, or the AO may, at any stage of proceeding, with the approval of senior officers, and after giving the assessee an opportunity of being heard, may require the assessee to get his account audited or to get the inventory valued from a cost accountant. The auditor and the valuer is nominated by the senior officer. The AO can do this only if it is in the interest of revenue and he feels the accounts are complex or voluminous, or he has a doubt about the correctness of the accounts, or their multiplicity of transactions, or the business is complex, has a specialized nature. In either of these cases, AO can ask the assessee to get the account audited or to get the inventory valued from a cost accounting, or both. The assessee shall furnish the report of such audit or valuation within a time specified by the AO. AO may suo motu on an application of the assessee extend the time, but the aggregate time cannot exceed 180 days from the date of receipt of a direction. The CA or the cost accountant shall be nominated by the senior officers, and the expenses shall also be decided by the senior officer, and such expenses shall be paid by the central government. Okay. AO, during the course of proceeding, may also refer the valuation of any asset to the valuation officer, and valuation officer shall give the assessee an opportunity of being heard, and on the basis of the submission of the assessee and the material gathered by him, make a report, and valuation officer shall send the report to the AO within 6 months from the end of the month in which reference is made. The AO may use the report of the valuation officer after giving the assessee an opportunity of being heard. Now comes the assessment part, 143.1. Okay. So 143.1 is again not an assessment, it's only a processing of it, intimation. And it's not called an assessment. Assessment starts from 143.2. So 143.1, processing of return of income. 100% of the return furnished are processed under section 143.1. So items furnished under section 139 or 142.1 are processed by the CPC, Central Processing Cell. And in the processing, you can only make the following adjustments. You can correct the arithmetic error or an incorrect claim which is apparent from information in the return, meaning thereby if there is an item which is inconsistent with any other item in the return itself, if the information which is required to be furnished for claiming a deduction is not furnished, or the amount of deduction claim exceeds the prescribed limit for such deduction, or there is any inconsistency in the return with respect to the information furnished for the earlier return, or there is a loss, setup of loss claim, and the setup of a brought forward loss is claimed, and the return for such year was furnished after the due date, or there is some disallowance in the tax audit report which has not been considered in the return of income, or and in the case of processing, you can disallow deduction under section 10AA or part C of chapter 6A if the return is furnished after due date. After making all these adjustments, an intimation is sent to the assessee and determining the sum payable by it or refund due to him. However, no adjustment is made without giving the opportunity of being heard. Okay. The intimation can be sent, the processing can be done only within 9 months from the end of the financial year in which return is furnished. If there is no processing, then the acknowledgement of return is deemed as intimation. Then the assessment start 143.2 scrutiny notice, we call it. So the scrutiny notice whether can be issued only when the return has been furnished. In such case, AO may serve the assessor a notice requiring him to produce any evidence in support of the return furnished. Such notice has to be served, not issued, has to reach to the assessee within 3 months from the end of the financial year in which return is furnished. Now, on the basis of scrutiny notice, a scrutiny assessment done in section 143.3, where the assessee, where the AO, after making inquiries, calling for submission, asking for submission, he assesses the total income or loss of the assessee on the basis of evidence furnished by the assessee or material gathered by him, and determine the sum payable or refund due to him. So even a refund can be arise in case of scrutiny assessment. If he's making an assessment of the association institution who are eligible for section 10 exemption, and during the course of assessment, if AO feels, AO observes, AO finds that the activities of such institution are not genuine, are not in accordance with the exemption on the basis of which exemption was given. So since the exemption is generally given by an officer higher than the rank of AO, he cannot withdraw the exemption, but what he can do, he can write to the officer and to the central government, to any other officer who has actually given such exemption, and he shall wait for the order of such central government or the officer, and if the exemption is withdrawn, then he will pass the assessment order without giving benefit of section 10 exemption. Okay. Subsequently, we will study the time of starting from when he writes to the central government or to the prescribed authority, and ending with the time he receives an order from such government or the authority is excluded for determining the time of passing the assessment order. Logic. Similarly, if he is doing an assessment of any university, college, or association referred to in section 35, scientific research, and he feels that activities are not as per the certificate, as per the recognition given to such university, then he can write to the officer, to the government, and after giving an opportunity of being heard, and such institution, if the order, if the recognition given to such institution is withdrawn, then he can pass the assessment order accordingly. Similarly, for trust institution, he can write to the commissioner or chief commissioner who has given the registration, and if the registration is withdrawn, then he can pass the assessment order without giving the benefit of section 11 and 12. Okay. So this is called scrutiny assessment, in which the AO, the scrutiny assessment can happen only if the return is furnished, and the notice has to be served within 3 months from the end of the financial year, and a refund can generate in the scrutiny assessment. Then there comes a BJ, best judgment assessment. It happens when the assessee does not cooperate with the department. So if a person failed to furnish return under 139 or fail to comply with notice under 142.1 or scrutiny notice 143.2 or fail to comply the direction of special audit or inventory valuation, then AO, when ordering, assess the total income or loss of the assessee to the best of his judgment. Since assessee is not cooperating, so he will determine the income or loss to the best of his judgment based on the material available with him. Okay. And determine the sum payable by the assessee on the basis of such assessment. So a refund cannot arise under section 144. If assessment is happening under section 144, then a refund cannot arise. But before making an assessment under section 144, AO shall give an opportunity of being heard to the assessee. But such an opportunity is not required if a notice was already issued under section 142.1. Okay. JC. You remember we discussed who are AO? The ITO, if directed, or the AC or the DC. Now, the Joint Commissioner, who generally is not an AO, he may suo motu on its own or on the request of assessee or on the request of AO, call for the record of any assessment and give a direction to the AO to do the assessment such way. And such direction shall be binding on the AO. However, if the direction is prejudicial to the assessee, then assessee shall be given an opportunity of being heard. Very important, income escaping assessment, section 147. It's actually in 3 parts. So in first part, what happens is that a notice is so what happens is that income tax officer is in the possession of some information which suggests that the income has escaped the assessment. The proper tax has not been paid by the assessee. So in first stage, he gives such information to the assessee and asks him that why an income escaping assessment should not be made on him. The assessee gives a reply, and after considering the reply and the information available with him, he passes an order. And if he thinks that assessment has to be made, then he issue a notice under section 148, second step. In notice under section 148, he asks the assessee to furnish return of income, even if the return was already filed. Whether return already filed or not relevant. So once the notice is issued under section 148, means the income escaping assessment has been initiated. And then the assessee furnishes the information in support of its return. And AO calls for various information. And finally, he passes an order under section 147, the third step. So there are 3 steps. In first step, AO first gives an opportunity to the assessee to present his case whether why an income escaping assessment should not be started in his case. You know, because on the basis of information available with the AO. If the AO is not satisfied with the submission of the assessee, he issues the notice under section 148 initiating an assessment. Then after doing the assessment, after considering the replies of the assessees, he passed an order under section 147, the assessment order. Okay. So these are broadly 3-stage process. So where AO has information which suggests that income chargeable tax has escaped assessment, he provides such information to assessee and asks him issue a notice, a show cause notice, asking as to why notice in section 148 should not be issued in his case. On receipt, the assessee furnishes reply. Then AO, after considering the reply and the information available with him, pass an order under section 148A with the approval of specified authority. So, order under section 148A. What does the order say? Whether to issue a notice number 148 or not. That is, whether to initiate an assessment under section 147 or not. This is passed with the approval of specified authority. Who is specified authority? Additional / joint. Okay. So, with the approval of these 2 authorities, either of these 2 authorities, the AO pass an order, whether to go with the assessment or not. The provision of this section, however, section 148A, that is the requirement to give opportunity to the assessee to submit this case whether the assessment should be started or not is not mandatory, is not required if information is seen under a faceless scheme section under section 135A. Okay. So what all are the information which may suggest that the income has escaped assessment? The information may come from the risk management strategy adopted by the CBDT. From an audit objection, the CAG may have raised some audit that the income has not been assessed properly. From any information which comes into the possession of AO under section 90 or 90A, double taxation avoidance agreement. From a scheme, faceless scheme notified under section 135A, or if there is any order of tribunal court through which, in consequence of which, this assessment is required, or if there is any information under the surface. So, with the order of under section 148A, which is passed with the approval of specified authority, a notice is issued under section 148, requiring assessee to furnish return of income. The assessee has to furnish the return of income within 3 months from the end of the month in which notice is issued. And the returns of furnished is treated as a return furnished under section 139. However, such return is not possessed. Okay. But if the assessment is reopened on the basis of information under section received under section 135A, then you remember 148A proceeding was not required, and therefore the approval of specific authority was not taken for passing an order in section 148A because there was no order in section 148A in such case. Therefore, in this case, while issuing notice in 148, the approval of specific authority is required. So, if there was 148A, then approval of specified authority is not required for passing a notice under section, for issuing a notice under section 148. Why? Because in this case, the approval was obtained at this stage itself. But in case of 135A section, this is not applicable. This is NA. Then, while issuing notice under section 148, the approval of specified authority shall be required. Okay. What is the time limit? So, time limit for issue of notice under section 148A and 148 is given. It depends upon the income which is estimated to escape assessment. If such income is 50 lakh or more, and time limit is 5 years. If such income is less than 50 lakh, then the time limit is 3 years. So this 5 years and 3 years are the time for issuing 148A notice. And we add 3 months to come to derive the time limit for issue of notice under section 148. So if income is more than 50 lakh or more, then notice under section 148A has to be issued within 5 years from the end of relevant assessment year. And in such case, notice under section 148 shall be issued within 5 years and 3 months from the end of relevant assessment year. But if the income which is estimated to escape assessment is less than 50 lakh, then the notice under section 148A can be issued up to 3 years from the end of relevant assessment year. And notice under section 148 can be issued up to 3 years and 3 months from the end of relevant assessment year. However, there is no time limit to give notice to initiate assessment under section 147 if the notice to be issued to give effect to any finding or direction contained in any order passed by any authority or court. So what happened is that if there's a direction assuming there is a case in ICAI in respect of Mr. A, and for assessment year, say 17-18, and there's a direction in the order of ICAI that the income which was in question in such in such case does not pertain to 17-18 but pertains to AY 10-11. Then notice to assess such income for AY 10-11 can be issued at any time. There is no time limit because in such case the notice is issued in consequence of an order of ITAT. Okay. Similarly, assuming in this case the ITAT says the income in question in dispute is not of Mr. A, but it's of Mrs. A for AY 10-11. Then notice to Mrs. A under section 148 can be issued at any time to assess this income because such notice in pursuance of the order of ITAT. So these two are the cases where there is no time limit to issue a notice. So, who are the specific authority who gives the approval for passing the order in section 148A or for issuing notice under section 140A in case of section 135A. So authorities are additional or the joint. We already discussed. In this case, the income is taxable at the rate applicable for such assessment year. Logical. Yeah. Okay, doctrine of partial merger. What is that? It says that assuming the assessment has for AY 22-23, the assessment already happened under section 143, which means assessment 143. Now, subsequently, against this assessment, the assessee is in appeal. Assuming currently the case is before the CIT appeal, pending before CIT appeal. Now, in respect of this year, the AO gets some information, and he found that the income has escaped assessment. That even if this year is before an appeal, then AO can issue notice to tax such income which was not taxed in the earlier assessment. So this is called doctrine of partial merger. So only those additions, those businesses, those income streams which was considered at the time of original assessment, which is pending, which is disputed before CITA currently, cannot be again added. But if there is any other income stream, assuming at the time of 143.3, income of Pune business was assessed. Now the AO found that assessee also has a business in Delhi. Then we can issue a notice to assess the Delhi business. Time limit. Okay. What are time limit of completing various assessment? So scrutiny of 143.3 or 144 has to be completed within 12 months from the end of valuation assessment year. However, if the assessee has furnished an updated return, which can be furnished up to 4 years from the assessment year, or he can furnish a return in consequence of order in section 119, means the CBDT has condoned the delay in furnishing return of income. Then assessment can be completed within 12 months from the end of the financial year in which the return was furnished. Order 147 assessment has to be passed by 12 months from the end of the financial year in which notice under section 148 was served. So whenever notice is served, you end that financial year, you add 12 months to that. Fresh assessment in consequence of an order of ITAT or CIT. If the ITAT or the CIT has set aside the assessment and asked the AO to do a fresh assessment, then the order of fresh assessment has to be passed in 12 months from the end of the financial year in which the order is passed by CIT or received by CIT, as a case may be. Where the fresh assessment has to be done by the TPO and the AO has to pass his order in conformity with the order of TPO. Then AO can pass the order within 2 months from the end of the month in which the TPO order is received by him. Order appeal effect order means the assessee has filed an appeal and now the AO has to give effect to the appeal order. Assuming AO has made 3 additions A, B, C, assessee has filed an appeal against these 3 additions and the CIT has given relief in respect of C. Then the AO has to pass an order, PF has to again compute a demand by giving the deduction C. So this is called appeal effect order. The appeal effect order has to be passed within 3 months from the end of the month in which the order is received or passed by CIT. But this 3 months can be extended by further 6 months where it is not possible for AO to pass the appeal effect order within this 3 months for reason beyond his control. Then CIT may extend it, allow additional 6 month time. Also, assuming the AO has to pass an appeal effect order, but such appeal effect order has to be passed after verifying, after inspecting some document, or after giving assessee an opportunity of being heard. And in such case, it will be deemed as it's a fresh assessment and it has to be completed within 12 months from the end of financial year. Okay. Where the order should be passed in consequence of to give effect to any finding or direction contained in the order of appeal authority. Then such order should be passed within 12 months from the end of the month in which the order of appeal authority is received by the CIT or is passed by the CIT. Where the assessment is made on a partner of the firm in consequence of assessment made on the firm. Then the order in the case of partner shall pass within 12 months from the end of the month in which assessment of the firm is passed. Okay. Wherever there is a reference to a TPO, the time limit as discussed above shall be extended by 12. Okay. However, while compared to the above time limit, these time limits shall be excluded. And this is the time, this is very logical, you find them very logical. These are the time by which the time of the AO in completing the assessment gets wasted. So, if the AO has changed and the assessee has asked for reopening, you remember we discussed in section 129 that if there is an incumbent to the AO has changed, then the assessee may ask to reopen the old proceeding or for the rehearing. Then the time spent on this shall be excluded from the above time limit. Period during which the proceeding was stayed by a court shall be excluded. Period when the AO writes to the government to withdraw the exemption of the institute under section 10 till the time he receives an order from the government is excluded. Similarly, period when starting from the date when the AO writes to the CIT or CCIT to withdraw the exemption of a trust till the time he receives an order is excluded. Period if it period consumed in special audit under section 142A, or in valuation in reference to the valuation officer. Period starting from the date when the assessee files an application with the advance ruling ending with the date of order of such advance ruling. Because during this period, AO cannot work. Period starting from the day when its first reference was made for exchange of information under section 90 and ending with the date on which last information is received. The period starting from the date where the reference is made for impermissible burden agreement IAA for GAR ending with the date of the order. If after excluding all this period, time left with AO is less than 60 days, then it is extended to 60 days. Okay. So this was about time limit. Now, notice of demand, section 156. By this notice, our demand is raised on the assessee. So when an assessment order is passed, our notice of demand always accompanies the assessment order, whether it's zero or the amount. It provides, it asks the assessee to pay this amount within 30 days. Okay. So, notice of demand is passed for recovering any tax, interest, penalty, fine, or other sum in consequence of an order passed under this act. However, tax on ESOP, employee stock option plan, in respect of ESOP granted by a startup, eligible startup, referred to in section 80 IAC. So, to the employees of a startup to whom ESOP has been allotted, a benefit is provided, deferment is provided that they can pay the tax within 4 years from the end of assessment year or on the sale of such ESOP or on cessation of their employment with the startup, whichever is eligible. So this is a benefit which is provided to employees of startup. Okay. So now we are moving to DRP, dispute resolution panel. So what is DRP? In case of eligible assessee, who is eligible assessee? The assessee who is an NR of foreign company, or in whose case the addition is made on the basis of order of transfer pricing officer, TP. So if you are an eligible assessee, means you are either non-resident or a foreign company, or in your case, the addition is made on the basis of a TP order, TP order of a TP. Then you have two routes. You can either go to the CIT appeal to challenge the addition, CIT appeal route, or you can go to the DRP. So in your case, what happens is that whenever there is a eligible assessee, the assessing officer does not pass a final assessment order. It passes a draft assessment order and gives it to the assessee and asks the assessee of his choice whether he wants to contest the order before the DRP or he wants to contest the order before the CIT appeal. If the assessee says that I want to contest the order before the DRP, then AO does nothing. He's asked, then in such case, the assessee approaches the DRP. He does a hearing before the DRP. DRP gives the direction. Then the AO passes the final assessment order in accordance with the direction of DRP. But if assessee says that I want to go to the CIT appeal, or if assessee remains silent, then in such case, the AO finalizes its order, passes the final assessment order immediately, at that time only, in consonance with the draft order. And now the assessee can take this order, final order, to the CIT appeal. So these two routes are available. Your choice to the eligible assessee. Who are the eligible assessee? Either the non-resident or a foreign company, or any other person in whose case the addition is made on the basis of order of TP. You understood the process? So in case of DRP, what does the AO does? AO passes a draft order. He gives the draft order. The assessee files objection against the draft order before the DRP. Who is the DRP? DRP is a constitution of 3 members equivalent to CITs and OPCITs. So the assessee files objection against the draft order before the DRP. DRP gives a hearing, and DRP considers the facts, the assessment order, the facts produced before it by the assessee or by the assessing officer, makes an inquiry, requires the assessing officer to do the inquiry, and gives a direction. That direction may be against the assessing or in favor of assessing. Whatever direction is issued, the AO has to follow it. Such direction are binding on the AO, and the AO passes a final assessment order on the basis of such direction without giving the assessee another opportunity of being. You understand the process? So an eligible assessee has following 2 options. In case AO makes a variation, he can go for the CIT appeal route, then no DRP, but he can go the DRP route. In case of eligible assessee, AO shall forward a draft order, to the eligible assessee. If AO proposes to make any variation prejudicial to the interest of assessee. On receipt of draft order, the eligible assessee within 30 days of such receipt either files the acceptance of the variation. If I'm good with the variation, I'm okay with the addition, you pass a final assessment order. Assessee will do this either if he doesn't want to contest the challenge the addition, or he wants to challenge the addition before the CIT appeal, not before the DRP. So assessee within 30 days either files the acceptance, or within 30 days either he files the objection to such variation with the DRP and the AO, and gives a copy of the objection to the AO as well. AO shall complete the assessment by passing a final order on the basis of draft order itself. When? If assessee intimates his acceptance, if assessee says, I'm good with this addition, you go ahead with pass the final order. Or if within 30 days, AO does not receive the objection. If no objection is received within the aforesaid period of 30 days, then AO goes and passes the final assessment order. Such final assessment order is passed in 1 month from the end of the month in which acceptance is received, or the aforesaid period of 30 days expires. Now, if assessee files objection before the DRP and the AO, then before issuing any direction, DRP may make such inquiry or cause any such inquiry to be made by an income tax authority and report the result to same to it. If the members of DRP have different opinion, then the they are the point is decided on the basis of majority because there are three numbers. An opportunity of being heard is given to the assessee and to the AO both before issuing direction. What DRP can do? DRP can issue direction as it thinks fit for the guidance of AO to enable him to complete the assessment. The DRP may confirm, reduce, or enhance the variation proposed in the draft order. It may confirm, it may reduce, or it may enhance as well. Okay. But DRP cannot set aside the proposed variation. It cannot issue a direction asking the AO to do the inquiry and then pass an order. It cannot issue direction for further inquiry. Power of DRP to enhance shall include power to consider any matter within the assessment order. Every direction shall be binding on the AO. DRP has to pass the direction within 9 months from the end of the month in which draft order is passed forward to the eligible assessee. Upon receipt of direction, AO shall complete the assessment by passing final assessment order in conformity with the direction. At this time, AO is not required to provide any further opportunity of being heard to the assessee. And AO shall pass the order within 1 month from the end of the month in which such direction is received by him. So clear? Against this order, of course, the assessee cannot file an appeal before the CIT appeal. Why? Because at the start of the class, I told you the CIT and CIT appeal are of equivalent. So this order is being passed in accordance with the direction issued by CIT. So against the order of CIT, you cannot file an appeal to CIT appeal. This order can be challenged only before the ITAT. Okay? Other point. The provision of this section is not applicable if the assessment is made with the prior approval of CIT as provided in section 144BA. GAR. The provision of this section shall not apply to any proceeding related to search. If there is search, then the DRP route is not available. Now see, DRP is a panel of 3 PCIT or CITs. Eligible assessee, see, means the person in whose case the variation is arising as a consequence of order of PTO or a non-resident not being a company or a foreign company. Okay. Now, the last type of assessment, we discussed the scrutiny assessment, we discussed the best judgment assessment, we discussed income escaping assessment, then we discussed the DRP, and now lastly, we will discuss the block assessment. Assessment in case of search. So what happens is that when a search happens, assuming a search happens on, say, in the premises of assessee, say on 1st May 25. Then in this case, assessment of not of 1 year, but assessment of a block period happens. Block period means a period of 6 years preceding the year of search plus year of search up to the date of search. So in this case, the block period shall be 25, 26, no, not 25, 26. So first apply 25 to 1st May 25 and 6 years preceding this time. Means 24, 25, 23, 24, 22, 23, 21, 22, 20, 21, 19, 20. So these 6 years plus this part of the current year is called block period. Okay. We'll do the assessment of all this period as a part of one assessment. One assessment order shall pass for all this block period. Okay. Now, this is the block period which is discussed. Undisclosed income. Undisclosed income means the income represented in the form of money, bullion, jewelry, etc., which is not disclosed in the return of income, in the books of accounts, or any expenditure which cannot be supported by the supporting voucher. So what happens in case of such, my dear friends? Yes, friends, yes. You're getting my point. What happened in this case? The AO issues a notice. Let's do with the note only. So in this case, AO assess a total undisclosed income of block period. And what is the total income which is assessed in case of search? Is the income for all these 6 years. We aggregate the income disclosed in the return, or if any assessment has already been taken place in respect of this year, the income already assessed plus the income shown in the books of account in respect of the year for which the due date of furnished return of income has not expired, plus income shown in the books of account in respect of this period, the period of the current year. Yeah. This all becomes my total income. But tax is not levied on total income. Tax is levied only on the additional income. So what happens is that when a search happens, after the conclusion of search, the AO issues a notice asking assessee to furnish return of income. And if the assessee does not furnish return of income within time, then an interest is levied at the rate of 1.5%. In such return of income, the assessee may disclose more income than earlier disclosed. So assessee is required to furnish return of income for the block period. It may disclose more income. So the tax in case of search is levied on the income, on the additional income disclosed in the return, which was not disclosed earlier, plus any income which the AO finds, which has not even been disclosed in the return of income. So on these two income, the undisclosed income, the tax is levied at the rate of 60% plus surcharge and cess. Okay. Now in this case, no interest on 24A, B, C is levied because, of course, 1.5% interest has already been levied if return of search is not furnished within a time. Okay. Now the law says when in case of search, the assessment of block period happens, assessment of all this year happens. Now there may be a situation that assessment of this year or assessment of this year or this year may be already pending. The regular assessment may already pending before the IO. In such case, these pending assessments shall abate. Abate means shall cancel. Okay. But the abate is only the assessment only gets abate. If any appeal or revision proceeding were pending for these years, then they will continue. They don't abate. So only assessment proceeding get abate. But then the law says it may happen that subsequently in the appeal, it may be decided that the search was not constitutional and the search proceeding may be declared invalid and the block assessment order may be annulled. In such case, the regular assessment proceeding which was abated shall revive. And then subsequently, assuming the CIT appeal said that the search was not conducted in accordance with the provision of the Act, and therefore block assessment order is annulled. Then the proceeding for 24-25, which was abated, and 23-24 shall be revived. But now the department files an appeal against this CIT appeal order before the ICAI. And ICAI then cancels the CIT appeal order and says that search was in accordance with the provision of the Act. Now, once the search order becomes active, these two orders, two proceedings which got revived, shall again abate. So they are mutually exclusive. Either the search order would prevail or the original assessment. But both cannot go along side by side. But one shall always prevail. Okay. So there is one more point. If there is subsequent search, then the assessment of subsequent shall be kept on hold till that time the assessment of this search is completed. And once it's completed, then the assessment of subsequent search shall begin and a period of 3 months shall be allowed. Okay. So we discussed this, we discussed this, we discussed this. Okay, loss from the period earlier, prior to the block period cannot be set off against the income of the block period, but it can be carried forward subsequently. We have already discussed this. DRP provision do not apply in case of such. Okay. You remember I told you, if some documents or the valuable article of some other person are found in a search at my premises, then the AO, price officer, shall hand over such document or the valuable article to the jurisdictional officer of such other person within 60 days from the conclusion of search. Then in such case, the assessment on such other person shall also be done as if such has been done on such other person. The time limit for completion of block assessment, this 12 months from the end of the quarter, in which the last of the authorization of search or acquisition was executed, means at that from the conclusion of the search. If matters refer to TPO, 1 extra year is allowed. Penalties. So, whatever tax computed on the undisclosed income, penalty equal to 50% of such tax shall be levied. However, penalty shall not be levied if immunity can be granted against the penalty if such person furnished a return of income, has disclosed such income in the return of income, has paid taxes, evident taxes was furnished, and he has not appealed against the assessment order. Then in such case, penalty of 50% shall not be levied only on that part of income which was disclosed in the return of income. On the income which was not even disclosed in the return of income and was found by the AO, penalty shall levied in all cases. Interest under section 24 ABC is not levied. Now we come to the rectification part, 154. So section 154 gives a power to any income tax authority, we know who are income tax authority, who they can amend their order to rectify any mistake apparent from it. A mistake should be very much apparent, there should be no two views possible. Okay. Even the order or the intimation, both can be rectified. Okay. The authority can make the rectification on its own motion or on the request of the assessee or on the request of the AO if the authority is CITP or JCITP. The doctrine of partial measure. Even if the part of the order is in appeal, still the authority can make the rectification in respect of other part. But if the rectification result into a higher tax liability or reducing the refund of the assessee, an portion of being heard shall be given to the assessee before making the rectification. Okay. The rectification can be made up to 4 years from the end of the financial year in which the order sought to be rectified was passed. And if the application is made by the assessee, then the authority, income tax authority is mandated, is directed, is an obligation to pass the rectification order within 6 months from the end of the month in which application is received by it. However, this 6-month period is within the overall 4-year period. Now, section 155 says that automatic rectification. In this case, there is an automatic need of rectification. Now you will see all these are logical. If assessment has happened on the firm, then there is a need to rectify the order of the partner. Similarly, if the assessment has happened on the AOP BY, then there is a need to rectify the order on the members. If the loss or depreciation of 1 year has been reduced under section 147, then there is a need to rectify the subsequent year in which such loss or depreciation was set off. If the condition of section 47 was not satisfied subsequently and therefore by virtue of section 47A, the capital gain which was claim exempt become taxable, then there is a need to rectify the order to withdraw the exemption. If the credit of TDS or TCS was not allowed, then to allow that TDS, there is a need to rectify the order. To give a credit of income tax paid outside India. If the full value of consideration is of an asset is amended, है ना, in stamp duty for the purpose of stamp duty, in the stamp duty law, then there is a need to rectify the order because the amount of capital gain shall change. If any asset was compulsory acquired and the compensation was taxed as capital gain, but subsequently that compensation was changed, then there is a need to amend that order. If any patent was revoked and the assessee had already claimed deduction under section 80 RRB, then there is a need to amend the order to withdraw that deduction. If tax has been deducted in subsequent year and the income has been offered in earlier year, then there is a need to amend the order to allow the TDS. Okay. The faceless proceedings. So now we know, as we discussed also, almost most of the proceedings are in faceless, the assessment done in faceless manner. What happened in the faceless? There are 4 types of units: assessment unit, verification unit, VU, RU, review unit, and technical unit. So what are the functions of this? The assessment unit does the assessment. It issues notice to the assessee, consider the reply submitted by the assessee, and prepare the assessment order. What does the verification unit do? It does the verification, as the name suggests. It go do the inquiry, on ground inquiry, etc. Technical unit is for giving the technical knowledge, technical opinion to the assessment unit on any point. Review unit, what does it do? It reviews the order passed by the assessment unit and suggests changes. So what is the procedure? So there's NFAC, National Faceless Assessment Center. It assigns any case to AU, to assessment unit, and notifies this fact to the assessee. Then NFAC itself serves on notice section 143.2 or 142.1, the initial notice. The assessee may file the reply, may not file the reply. If it files the reply, it passes on such reply to the AU. NFAC is nothing but a postman. Then what AU does? AU asks the NFAC to seek some information from the assessee. NFAC accordingly issues the notice to the assessee and obtain the information. The information so obtained, it pass it on to the AU. AU consider the information, or AU may ask NFAC to do a verification. In such case, NFAC refers the case to the VU, verification unit. Verification unit does the verification and submits the report to NFAC, which it forward to the AU. If assessee does not comply with the notice, then this fact that assessee has not complied, NFAC report to the AU, then AU issue the notice under section 144 and hand it over to NFAC, which it handed over to the assessee. After considering everything, AU pass a draft order and forward it to the NFAC. Now, NFAC may consider it correct or may refer it to the RU. Then RU again consider the order and give its comment, which NFAC shares with the AU, assessment unit. The comment shared by the RU is not binding on the AU. AU may accept them or may not accept them. And finally, AU pass a final order. Now, if the case is related to the eligible assessee, the AU pass a draft order and hand it over to the NFAC. NFAC sends the draft order to the assessee. And if assessee files an objection within 30 days with the DRP and NFAC, then this fact is communicated to the AU, assessment unit, and assessment unit waits for the direction of DRP. If assessee does not file an objection, then this fact also communicated to the AU, and AU then pass the final assessment order. Okay. So this is the way the faceless proceedings are being conducted. So this completes our assessment procedure. Now we'll start with the assessment, appeal, and revision. So first we discuss the return of income. Then we discuss how the return of income is assessed, various assessments. Now, against the assessment order, the appeal. What's the root of the appeal? So generally, AO pass the assessment order. Of course, against the assessment order, AO will not go into appeal because it's own order. Whatever he wants to say, he has already said in the assessment order. Against this assessment order, the assessee files an appeal before the CIT appeal. We call it first appellate authority. Against the order of CIT appeal, both the AO as well as the assessee can file an appeal to the ITAP. Then against the ITAT appeal, ITAT order, both department and the assessee can go to the High Court, then to the Supreme Court. And Supreme Court is the final authority in India. You cannot go beyond the Supreme Court. Whatever Supreme Court says, everybody has to accept it. So this is my appeal. First, I go to CIT appeal, then ITAT, then High Court, and then Supreme Court. This is my appeal. Okay. So now, few years back, government realized that the JC and additional are sitting idle, and there's a lot of work at the CIT appeal level. So what they did, they introduced section 246, where they said that appeal can be filed before the JCIT appeal as well. So they introduced a new designation, JCIT appeal, and an appeal can be filed before the JCIT appeal as well against any assessment order or against the intimation under section 143(1) or TDS or TCS intimation. But only condition is that that order has to be passed by officer below the rank of JCI and without the approval of any officer of JCI to higher rank. So only order passed by lower rank can be challenged before the higher rank. Okay. So an appeal can be filed against an intimation, against assessment order or TDS order or intimation TDS or TCS intimation penalty order, provided such order is passed by authority, is not passed by authority above the rank of DC, means JC or above. Okay. Now it says that appeal pending before the CIT appeal can be transferred to the JCIT appeal and vice versa by the board, by the CBDT. But an opportunity of being heard to the assessee shall be given. Now, appeal can be filed to the CIT appeal as well. So either the appeal is filed before the JCIT appeal or the CIT appeal. In this case, the JCIT or CIT are optional. Both are first appellate authorities. In this case, against the orders, types of order are same, the assessment order, the intimation, what all. But any order which is passed in accordance with the approval of the CIT level officer cannot be challenged at CIT appeal level. You understand? So, if the order is passed for rejecting the registration of a trust which is passed by CIT, cannot be challenged here at CIT appeal level. Order passed in accordance with the direction of DRP cannot be challenged here. Order passed in accordance with the by applying the guard provisions cannot be challenged here, because all these orders passed with the approval of CIT or a board or a board or comprising one or more CITs. These orders can only be challenged before the ITATs. So appeal is filed before the CIT appeal or JCIT appeal in Form 35. The appeal is accompanied by a fee. Fee depends upon the income assessed. If the income is up to 1 lakh, then 250. If income is 1 lakh or up to 2 lakh, then 500. Income above 2 lakh, then 1000. But if the appeal is in respect of penalty or some other matter, then there's a fee of only 250 rupees. The appeal is to be filed within 30 days from the date of service of notice of demand. In any other case, there is no notice of demand, then date of service of order against which appeal is filed. Okay, within 30 days. If the appeal is filed after 30 days, then it has to be accompanied with the condonation application, and the CIT appeal or JCIT appeal, as the case may be, may admit the appeal and condone the delay. In case of penalty, you know what happens is that there is an option on section 270AA where the assessee can approach the AO and ask for the immunity of penalty, and provided on the basis that he is not filing an appeal. But subsequently, if the AO declined to give the immunity, then this period starting from the date he files an application up to the period of order under 270AA shall be excluded by a complete period of 30 days. See, I tell you, listen, when an assessment order is passed, it's not passed alone. So what happens? It is passed with assessment order passed with two more documents. A notice of demand under section 156 is passed. Plus there is a computation. Plus there is a penalty notice where penalty is not levied. So immediately on passing of assessment order, three things assessee has to do. Three things. First, he has to challenge the assessment order, file an appeal. We call it merit appeal. Appeal on merit on assessment. He has to file a stay application because of this assessment order demand has arisen, and he has to file a stay application with the AO requesting him to keep the demand recovery proceeding stay. Then he has to reply to the penalty where penalty is not levied. And subsequently, if penalty is levied, then he has to file an appeal against the penalty order as well. Assuming in this case, what the assessee decide to not to contest the assessment order, and he deposit whatever amount was demanded in the assessment order. But he said that don't initiate penalty and they invoke section 270AA. But subsequently, 270AA application was rejected. Now he wants to contest the assessment because he did not contest the assessment because he wanted to get the immunity from penalty. But since the immunity from penalty was denied, he will contest the assessment order. Now, can he file the appeal? But the time limit to file the appeal against the assessment order has already passed 30 days. But law says that if the appeal was not filed because 270AA and subsequently 270AA application was rejected, then the time spent in the 270AA proceeding shall be excluded. Okay, so when you file an appeal against the assessment order, you either have to, if you have already furnished a return of income, the tax on the return of income must have been paid. But if the return of income was not filed, then whatever advance tax was required to be paid, you have to deposit it before filing the appeal. But in this case, where the return was not filed, CIT appeal may waive away the requirement to deposit the advance tax. So what happens in the case once you file an appeal before the CIT appeal? The CIT appeal issue a notice fixing a date of hearing. He gives an opportunity to the assessee, to the AO, to submit the submissions, to say whatever he wants to say. You can raise any new grounds of appeal before the CIT appeal or JCIT appeal, which was not raised earlier. It is recommended that the CIT appeal pass an order within 1 year from the end of the financial year in which appeal is filed. So for all judicial authority, the time limit is given, but that time limit is not mandatory. They are only recommendatory. CIT appeal can pass order beyond this date as well. CIT appeal proceedings are also faceless. So what the CIT appeal can pass an order? They can confirm, reduce, enhance or annul the assessment, or enhance or reduce the penalty. But generally, they cannot set aside the order of AO and ask for the fetch assessment, except in one case where the order of AO was passed under section 144. Now appeal to appellate tribunal. Okay. So against the order of CIT appeal, we file an appeal to ITAT. And here, even the department can file appeal to ITAT. The appeal is filed in form 36. Okay. Also, against all those orders which was passed with the approval of CIT or CCIT are also challenged before the ITAT only. You don't need to remember the type of order. With the time limit, important, there's a change. So earlier it used to be 60 days, but now it is 2 months from the end of the month in which order sought to be appealed was received or communicated to the SSC or to the CIT. In this case, once an appeal is filed by one party, the ITAT notifies to the other party also that an appeal has been filed, and the other party may, it's not mandatory, may file a memorandum for objection within 30 days of receipt of such notice. May file his side within 30 days. So, if department files an appeal against the CIT appeal order, then ITAT shall notify the SSC as well that against you an appeal has been filed. Then SSC may go to the ITAT and say that, sir, ये लोग चालाकी कर रहे हैं. The CIT appeal has already given me relief on this ground, and this appeal does not survive. So I want to say this. So for this, SSC can file a memorandum of objection, cross objection, stating, giving his point. But it's not mandatory for the other party to file memorandum. It's only optional. The appeal to ITAT is with the fee. The fee is if the total income is up to 1 lakh, then 500. From 1 lakh to 2 lakh, 1500. Exceeding 2 lakh, 1% of the income, or maximum 10,000. So fees cannot exceed 10,000. In any other case, 500. In case of stay or demand, 500. Okay. Once the ITAT order is passed, ITAT can also rectify the mistake in the order. But the ITAT doesn't rectify the mistake under section 154. Why? Because you remember 154 say any income tax authority can rectify. And ITAT is not an income tax authority. So ITAT rectifies the mistake under section 254, and we can rectify mistake within 6 months from the end of the month in which order is passed. And there's a fee for filing a rectification application of this 50. It is recommended that ITAT pass the order within 4 years from the end of the financial year in which such appeal is filed. But you remember, see, assuming CIT appeal held against the SSC. Okay, against the SSC. Now, SSC files an appeal before the ITAT. But since the CIT appeal has given a direction, has given an order against the SSC, the AO will insist on recovery of the demand, which was raised through the assessment order. Now, in this case, what we do is that we file an appeal before the ITAT on merits. The same time, we file a stay application with the ITAT, requesting the ITAT to direct the AO to stay the recovery proceedings. In this case, the ITAT has only power to grant a stay up to 180 days from the date of order. Whenever ITAT passes a stay order, it can direct the AO to stay the proceeding only up to 180 days. But if the ITAT order is not passed, ITAT order on merit is not passed within 180 days, then after 180 days, the AO will start recovery. So in such case, SSC can again apply to the ITAT after the expiry 180 days to extend the stay. And the ITAT may extend the stay if ITAT believes that the delay in disposing of the merit appeal is not attributable to SSC, but the aggregate period cannot exceed 365 days. The maximum stay which can be given to the SSC is up to 365 days. And after 365 days, the stay shall be vacated even if the delay is not attributable to the assessed. And also this stay of 180 days or 365 days is given with the pre-deposit of 20% of the demand of the outstanding. Okay. ITAT is a final fact-finding authority, meaning thereby against the order of ITAT, you can file an appeal to the High Court only on the question of law. if any question of fact, and if facts are in dispute, then you cannot approach High Court. Whatever the ITAT says is the final. ITAT had different benches. SMP, single member bench. Then normally there's a bench with a 2 member, judicial member and accountant member. Then sometimes there's a special bench. If a case is not decided by a judicial member, accounting member, means they are not of a same view. If they differ in their opinion, then the case is referred to the president of ITAC, who nominates one more member, who listen to the case, and the issue is decided on the basis of majority. These 2 members who earlier heard the case plus the new member. Okay. So now we are moving to appeal to the High Court. So appeal to the High Court is filed only on the substantial question of law, no question of fact. And even this question of law, on what is the question of law, is formulated by the High Court itself. And High Court then answers this question which he has only formulated. The appeal is to be filed within 120 days from the date of receipt of order against which the appeal is filed. Of course, the High Court can condone the delay. Against the appeal of the High Court, against the order of the High Court, appeal lies to the Supreme Court. But appeal can lie to the Supreme Court only if the High Court says that it is a fit case to appeal to the Supreme Court. See, at that level, they are mature enough. It's not that you are filing an appeal against my order, I will not give you permission. So if High Court says that the issue is of such importance that it requires the time of Supreme Court, it says that it's a fit case to appeal to Supreme Court. And in such case, only in such case, the assessee can file an appeal to the Supreme Court. Otherwise, assessee cannot file an appeal to the Supreme Court. Because practically what happens, assessees normally do not file appeal to the Supreme Court. They file SLPs, potential leave petition against the High Court order. For this, they don't need a certificate from the state. There is a time limit. Filing for appeal against first degree authority is 30 days from date of service of notice of demand or service of notice of demand or date of service of order appealed against. For ITAT, important 2 months from the end of the month in which order sought to be appealed was communicated. Before High Courts, 120 days from the date on which order sought to be appealed is communicated. Of course, the authority can condone the delay if there is a delay. Now, 2 important sections. 158A. When it says that it's actually something logical and it reduces the burden of my judiciary. It says that there is a assessee. It generally happens actually. Mr. A, and an expense is disallowed in case of Mr. A. Then this is an order is passed and the assessee, Mr. A, is in appeal, say before the High Court against such order. The order relates to AY 15/6. But practically the business remains same and the assessee every year claims such deduction. And every year AO disallows and assessee files an appeal. The matter remains in appeal for long. For AY 24/25, but AO again disallows the deduction. But assessee thinks I'm wasting my resources, my effort, my money in the appeal. It says to CIT appeal, sir, if you agree, I will not file an appeal against this addition. But you promise me that whatever will happen to the case of AY 15/16, whatever finally decided by the Supreme Court or by the High Court in the year of AY 15/16 in respect of this deduction, you will follow, you will apply such reason to this year as well. Because if I file an appeal against this year, ultimately it will be decided by the Supreme Court and whatever decided for AY 15/16 shall only follow. So why to waste your time and my time? Let's keep the appeal on hold till the time this issue gets actually finalized by the High Court or Supreme Court, as the case may be. And whatever happens, the same reason we will apply on this year as well. So if you allow me that time, I will allow me if you promise me that I will not file appeal against this addition for this year. Now, this is logic as well. And if the authorities agree, then he is not required to file the appeal against the same addition for subsequent years. This is given in section 158A. Now there is section 158AB. It is from the department side. Assuming the CIT appeal has held in favor of assessee. Now, the same issue is pending before High Court or Supreme Court in the case of assessee itself or in case of any other assessee. Now, what the collegium, the two or more CIT decide, they approached to the ITAT and said that, sir, we will not file appeal against the order of CIT appeal. But if you promise us that you will allow us an appeal once this issue has been finally settled. So, assuming this issue finally settled in favor of assessee by the Supreme Court, then the department is not required to appeal to ITAT because CIT appeal is in favor of assessee. And Supreme Court is also saying that deduction is allowable. Therefore, no need to change. But if the issue is settled against the assessee, then ITAT will allow the department to file a delayed appeal. If ITAT agrees to that, the assessee agrees to that, then the department shall not file an appeal. This is to reduce the effort of assessee and department both and reduce the burden of judiciary as well. So deferment of appeal by revenue when an identical portion of law is pending before High Court or Supreme Court. Okay. Now we are very close to the conclusion of our class. There are only 2 or 3 topics left. This we discuss about the appeal. Now, there is an alternative route, revision. What is revision? Revision can be in favor of assessee or against the assessee. Who revises? The CIT revises the order of AO. So if it's against the assessee, it is under section 263. If it is in favor of assessee, it is under section 264. So what happens is that under section 263, revision of order erroneous and prejudicial to the revenue, who is against the revenue. If CIT feels an order of AO TPO is erroneous and prejudicial to the interest of the revenue, against the interest of the revenue, they can enhance, modify the assessment, cancel the assessment, drag the AO to make a fresh assessment. Okay. When an order is considered to be erroneous and prejudicial to the interest of revenue, when it is passed without making inquiries or verification which should have been done, when any deduction or relief was allowed without making necessary inquiries, which has not been passed in accordance with the order, direction, or circular of the CBDT, or in order of the decision of the High Court or the Supreme Court. In all these cases, an order passed by AO may be treated as erroneous and prejudicial to the interest of revenue. And in such case, the CIT may revise the order. It may enhance the assessment, may enhance the liability, may enhance the income, or it may ask the AO to do a fresh assessment. Okay. Against this order of 263, appeal lies to the ITAT. But how will the CIT decide that whether order is prejudicial? It will examine the records, and record includes all such records which are available at the time of examination, not at time of assessment. It may happen that the AO may have referred the valuation of some asset to valuation officer, and valuation officer may not have given a report, or without waiting for the report of the AO, valuation officer, AO may have completed the assessment. Subsequently, the valuation officer report shows that the assessee has been assessed at a lower amount of capital gain. Then in such case, though the report of valuation officer, which is a record, was not available at the time of assessment, but now it is available at the time of examination by the CIT, and basis that valuation report, the order passed by AO is erroneous and prejudicial to the interest of revenue, and therefore CIT can revise the assessment. And assessment 263. What is the time limit? Time limit is 2 years from the end of the financial year in which order sought to be revised is passed. So this was 263. But it works on the principle of partial merger. Assuming the assessment order which is sought to be revised is before an appeal before the CIT appeal. Then also CIT can do 263 in respect of matters which are not pending before CIT appeal. Doctrine of partial merger. Now come 264, beneficial to assessee. Okay. So CIT can revise the assessment order in favor of assessee on its own or an application of the assessee. If it is doing on its own, then it has to pass the order within 1 year from the date of the order sought to be revised. Okay. And within this period only, 1 year from the date of the order, assessee can also file an application with the commissioner requesting him to revise the order. 264 is only for the benefit of assessee. In this, the commissioner can either confirm the order of AO or can reduce the assessment. It cannot enhance it. But against 264, there is no appeal suit. Assessee cannot file an appeal against 264. Assessee can file an appeal against 263. But if assessee chooses to go for 264, then it's the end of the road. Assessee has to accept whatever the CIT says. Okay. Also, it's a total merger theory. If a part of the order has been appealed against before the CIT appeal, then the other part of the order cannot be taken to CIT under section 264. Okay. And lastly, the appeal and 264 are mutually exclusive. Assessee has to choose either to file an appeal or to file a revision application in 264. So the revision application can be filed up to 1 year from the date of the order, but appeal can be filed within 30 days. So revision application is accepted only if it is filed after the expiry of 30 days and the appeal has not been filed. It can be accepted within 30 days also, but in such case, the assessee has to waive his right to appeal. Okay. The application is accompanied with a fee of rupees 500. If a revision is made on the application of assessee, then the order has to be passed within 1 year from the end of the financial year in which application is made. So this was revision. Now, last topic of today's class, there is a monetary limit. It says that it limits, restrict the department, not the assessee, to file an appeal only if the monetary impact is higher than the prescribed limit. So, what is the monetary limit? It is 60 lakh for filing appeal for tribunal, 2 crore for High Court and 5 crore for Supreme Court. If the tax impact is less than this, then the department cannot file appeal to the ICAI, High Court, Supreme Court as the case may be. This limit is only for the department, not for the assessee. Assessee can file an appeal even for rupees 1. But department can file appeal to the ICAI only if the tax effect exceeds 60 lakh or High Court if the tax effect exceeds 2 crore, Supreme Court as the case may be. However, not filing appeal because the tax effect is less than the prescribed limit does not mean that the department has accepted the stand of the assessee. So assuming there is a CIT appeal order in favor of assessee and the tax impact is only rupees 20 lakh. In this case, the department, though not agreeing to the order of CIT appeal, cannot file an appeal to the ITOT. But since in this case, the department not filed appeal, shall not preclude department from filing appeal on the same issue in case of any other assessee or in case of any other assessment year of the same assessment. Okay, logical. However, this monetary limit is not applicable if the appeal is to be filed in respect of any rule which has been declared constitutionally invalid, or if there is an offense alleged to have been committed under any other law, if any prosecution proceeding had been started, if the cost has been awarded by the ICAI or High Court against the department. If there is a no tax impact, means the issue is something different, like the whether the trust is required, eligible for registration or not. If the issue relates to foreign income or foreign disclosed assets, undisclosed assets, if the court has directed the department to file an appeal, if there's a writ matter, or if there's a matter outside the income tax. In all these cases, the above limit is not applicable. What do you mean by tax impact? Tax impact means the tax on the additions. So if I had shown 1 crore income and my income is increased to 3 crore, then tax effect is tax on 3 crore minus tax on 1 crore is the tax impact, which I have to compare with the limit. If there's a appeal against the interest, then the amount of interest is the tax effect. If there's appeal against the penalty, the amount of penalty. So my dear friends, this completes my appeal and revision chapter. We have already discussed doctrine of partial and total merger. So partial merger applies on 264 and 263, and total merger applies on 264. This is in favor of tax department. For 263, they have allowed partial merger, but 264, which is in my favor, they have applied the total merger theory. So this completes my chapter and today's class, where we have revised income tax authorities, return of income, assessment procedure, search assessment, rectification, appeal, and revision. So do comment how you find the class, the revision, and it helps us. And like the video, share it with your friends, and do subscribe the channel. Thank you. Thank you for your patient hearing. Thank you. Very good revision, sir. Thank you. Thank you. Thank you, sir. Yes, yes, over, sir. Thank you.